Well, welcome back once again, folks, to another day of trading. And halfway through the week, it's crazy the things that I mark the passage of time with. And so much of it is, unfortunately, it's not, it doesn't revolve around wedding anniversaries or children's birth dates or things like that, but it's trades. But anyway, here we are. We're in the middle of the week. We had a really busy day yesterday. I think you could put it that way. We had a really busy day yesterday. I don't think that today is going to be much different. I think that we're going to have some activity today. Well, we already have some activity today, right? Again, it's always a little easier for me in the mornings. You know, the mornings is really just an absolute crunch time for me. It's just this first 2 hours of the day for me is just an absolute crunch time because I'm trading in the futures pre-market. I've got my other accounts that I'm trying to get trades in as the market is opening up. I've got to manage the trade allocation every morning for the AST program. A lot of you have questions that you're DMing me with right away in the morning. And so it's pretty hectic in the morning. So it is kind of nice when we can. We haven't always been able to do that, but it is kind of nice when we can get our zero DTEs up and running right up front before we get started in the Zoom. Gives just me a little bit more latitude and time to be able to answer questions that you guys have, and of course go through our open trades and discuss them in a little bit more detail, a little bit finer point on all of them. And so that's what we'll do today. I do have a couple of things that I posted in the bonus training channel that I wanted to go through with you as well. And I wanted to talk a little bit about, I had a really good conversation yesterday in a one-on-one Zoom session with one of you. And we delved into one of, and there's many, but we delved into one of the definitions of position sizing. And again, there's several different views and several different approaches to, position sizing. Of course, is allocating your capital in certain manners, but there's different approaches or ideas or philosophies about that. And I wanted to share a definition with you guys today that I like, that I try to adhere to. It's hard to follow it exactly. But I think that will lead to maybe a more generalized conversation as well today. And then there's a couple other things in the bonus channel there that I want to, or the bonus training channel that I wanted to refer to today. So quite a bit of stuff to go through today. It's going to be a busy day. There's no question about it. Going to be a busy day, but let's jump into our disclosures. Trading involves risk, and they say that because trading involves risk, you should only use risk capital. And I think that one of the things that I have found in life is that people that tend to be really successful in life they have this innate ability to take negative things. And I've seen this over and over again, where they take, I'm talking really negative things, right? Like a loved one dies. Like they take really negative things, and they, for whatever reason, they have this power or ability to find the good in that. You're like, what good is there in your relative dying, But they find it. They find growth opportunities through anything that is adverse in nature. And I try to do that as much as I can in trading as well. They say, oh, it's risky, you should only use risk capital. I like this idea. I really like this idea of doing what I call subsidized trading, right? Doing these high probability trades we'll get into the trades here in just a minute, but the Russell trade, we've got two different iterations of the Russell trade going on right now. Those were pretty high probability trades. I put 15 grand in there, and it's got about $1,900 of total profit potential in that trade. I love the idea of taking $250 of that $1,900 and using that on simply long calls or puts. Debit trades, completely directional in nature, gives you the opportunity to triple or quadruple that money, usually, if you're right, if you hit it right. And if you hit it wrong, all you've given away is a little bit of profits, right? I love that idea. So anyway, we can find, I think, power in the disclaimers and the disclosures. Remember, position sizing is key. I'm starting to hate that phrase, position sizing, because I know, it's getting to be in the point, I think, I feel, at least in this trading room, where it's getting to the point where it's a little bit like the preamble that they give you on the airplane before you have to take off. Nobody tunes into that. Nobody listens to it, right? Because it's just kind of like background noise at this point. So maybe we'll change the verbiage instead of position sizing to talking about portfolio optimization today. I want to talk a little bit about portfolio optimization, but it will ultimately come back to position sizing. Remember, one trade, one single solitary trade should not make or break you. If you can get rich on one trade, you can also probably go broke on one trade, right? So just again, remember sort of one of our mantras: we always hope for the best, but we expect the worst, right? We look at worst case scenarios. I had another Zoom with one of you members yesterday, and he showed me a spreadsheet that he's put together where he's tracking his trades, and it's helping him. He uses it primarily to help him with position sizing. But one of the columns that I really loved in his spreadsheet was he has a column there that said, how much capital are you putting in, and what is the potential ROI, and all of the things that we always track. But he had a column there that also said, what's the max loss in this trade, right? And we can control that. It doesn't have to be a scenario where we just, sit back and let something go through both legs of the trade. It could be a stop loss. It could be a max pain threshold exit point where you say, hey, when the debit gets, to be 2 times or 3 times my credit, or whatever it is. But he had a column for that, right? What's the max loss potential in this trade? And then there was another column that I just loved that just was a simple yes or no column. And it was, are you okay with that? Yes or no? And in a lot of cases, it's like, yeah, I'd be okay. Some of them it's like, no, that's too much, right? So I just love that idea of, if we can really, really focus in on the position sizing aspect of the trade. So I want to talk a little bit about that today. Know and understand your trades. I've told you guys this before. I feel a little bit like a parent with a lot of you guys in here, and sometimes I'm chastising you guys, and sometimes I'm praising you guys, but I am really satisfied and pretty happy with the number of people that are direct message me or things. It could be a futures trade or a hedging trade, or what has more recently been these commodities trades, right? And people are like, okay, I don't understand, what's the nominal value, and what is a tick worth in this, and how does margin work in this? But they're asking the right questions before they just blindly jump into a trade. I love that. I think that's awesome. And I think that it shows that you guys are learning, right? We're growing and we're learning through this process. So really important. Remember, we can't give you any guarantees or investment advice. I can't every single day. I don't remember a day that's gone by where somebody is like, what should I do here? And I'm like, I can't, it's not that I don't want to. I legally cannot tell you what to do with your trade. So just understand that, right? Own your own trades. Very, very important. I still find it's so interesting that we are so jaded as human beings, and You know, anytime somebody's trying to sell you anything, you know, like you walk into a store, right, with the designed purpose of buying XYZ item, like you're purposely going there to get that item, and the salesman comes up to you and says, "May I help you?" And you say, "Nope, just looking, right?" Like we don't want to be sold any, you know, we're very jaded. We don't want to get, but then we just blindly throw like tons of money in some cases into trades, and we hope that they're going to work out from some external reason, right? And so it is important that we take ownership of our trades as we trade them. Make sure that you're in full control. Make sure that you're in control of your trade. Okay. All right. Remember, we're just a data feed subscription for you guys. I can't give you investment advice. Okay. Let's jump into our trades, because we've got quite a few trades going on already. I'm just looking. Why is that frozen? I might have to come back to having a little bit of problems here. Pulling up my my son's account. So we'll maybe I'll work on that here in just a little bit, and we'll see it. But let's go to our main page. I'll try to get that. Maybe I'll have to reboot his. I don't know what's going on. That account. His positions just suddenly disappeared. Let me play. Well, I'll play with it on a break here. I'll play with it on a break. Okay, so we are up and running today, obviously, and we've got a lot of stuff going on. I'll just go through them in no particular order from top to bottom here, and we can kind of see where we're at on everything. Let's just take a quick look at the markets here. Again, these are the futures contracts, but they'll give us a fairly good idea, obviously, of what the underlyings are doing as well. We've got everything up right now. Everything is pushing up right now, but the S&P is the one that is pushing the most right now. So all of our indicators are still bullish. It still looks like a bullish day. It still looks like we're pushing to these highs. We're starting to get, I think, a little bit more of this divergence in the up down volume, like we were getting just prior to when the market corrected and came down. Those scenarios where the market was going up every day the index was going up and up and up, but also simultaneously every day we were getting more and more items where we were getting down days rather than up days. And so there were fewer and fewer issues or equity participation to the upside, but they were the larger cap weighted items. We're getting a little bit more of that divergence now. You're not getting as strong a up volume versus down volume on these last couple of days as the move in the indices would imply. So we'll watch that here a little bit today, but the markets are pushing higher here this morning. So let's kind of go through our positions and talk about them. I do have obviously my 40 for 40. So we've closed out all of the natural gas trades that we are in as a group, right? We had the UNG. And let me open my close tab here, because we've got a couple of closed trades that we've already closed today as well. So we had the UNG that we closed out, and then also, of course, the nat gas itself trade in my son's account. We closed that out at a nice profit, and so we're all out as a group in terms of nat gas trade. We do have a new option expiration cycle in nat gas that is going to be coming up fairly soon, about a week or so. You can see that my nat gas here, they're going to expire in 6 days. So we may look as a group. Obviously, we're down around $5 for nat gas prices right now. The scariest trade in nat gas, if you look at a chart, maybe $2.50, $3 on the low end, and then maybe $6.50 or so on the high end. That's the range. It's such a scary trade, and gamma is, so massive in the trade that it is kind of scary to put a trade together on nat gas when it's kind of in the middle of that range. You kind of want it to be at one extreme or the other, right? You want to kind of see it bottoming out in the $2 range, even if it's a high $2.90 something cents, or up in that $6 range. And that's a little bit more higher confidence trade, but we'll look at it as a group again as this expires. I've talked a lot about this trade and how it's, I'm going to see if I can, it's just not pulling up for some reason. I'll try to get back to his in just a minute. But I've talked a lot about how getting into the 10-day window, right? We're doing monthly expirations on these. Obviously, they don't have weeklies. And getting down into the 10-day window is really when it's when the theta really starts to kick in. It's also when the gamma starts to kick in. And so you will see some wild swings. I'm predicting, at least, that you will see some fairly wild swings here in the P&L on this nat gas trade over these next 6 days as we try to work our way to expiration. I will, again, just for sort of educational purposes only, because nobody should be in this trade, right? And by the way, I would be very, very excited. The profit potential on this trade, if you hit it just perfectly, is like $25,000, and we're already up 5,000 on this iteration, and then I brought in like 10,000 before. So it'd be like $40,000. This trade right here, if it hit, this is the big factor, right? If it hits, would more than put me over, obviously, making $40,000 off of $40,000 in a 12-month period of time. I would love to close down the 40 for 40 plan. I would love to just close it down, because it's always a battle trying to keep you guys out of these trades, and they are inappropriate for us as a group. If you look at this, the cap requirements, what am I at now? About 50 grand, $51,000 on the nat gas position. And in the next 6 days, if you were to hit it perfectly, right, you got to hit that point right there, you would bring in 25 grand. So, any trade that you're going to put up 50 grand and bring in 25 grand in 6 days on no movement, right? That's just theta. You can assume that there is a lot of gamma risk in that trade. There is a lot of volatility risk in that type of a trade, right? So just, especially with that position sizing, not very appropriate for a group, but we did put one together in my son's account that was appropriate and ended up being a nice trade. So we might be able to do that again. But anyway, into the countdown on the nat gas trade. 6 more days to go there. You've noticed my theta sort of just edging, right? It was 500, 600, 700, got up to $900 a day, $1,200 a day. I think yesterday it was $1,450 a day or something like that. $1,700 a day now. So it's just, as long as I can keep, maneuvering it, you'll notice I'm adding some calls, I'm adding some puts, subtracting some calls, subtracting some puts, just trying to keep that centered in this as much as I can. Oh, also, one other thing that I wanted to mention, we talked about this on Monday, I believe, where there is a skew in the pricing of options and how that can manifest in a trade currently, as we are currently in the trade, versus what would happen at expiration, right? And I didn't have a really good example to show that to you guys with, but I do have a good example here today, and you can kind of see that obviously right almost exactly, you see the little flag there, almost exactly where nat gas is priced right now. If we closed, at expiration at that point, that would be the max profit, right, that this trade would potentially have. But you can see that between now and 6 days, this little orange line here, I would actually be better off pricing down here, right? And that's just because of the option skew. Now, as we move closer and closer to expiration, this line will merge with this line, but that was what we were talking about earlier, that'll option skew. Okay, so that's the net gas trade. Our NDX trade, our zero DTE trade on NDX, we were able to get off and running with that very, very quickly. Put 12,000 into that, brought 1,300 in. I was hoping on this trade to get just a little bit better than a 50% capture rate. We're there. So I may shortly here start looking to book our profits on our NDX trade, take our profits on that. Okay. I do have my closed tab open there. That's good. So we booked profits on Netflix. I think it's interesting on Netflix. Obviously, the numbers were exactly what we wanted them to be, but thanks, Todd, for typing that. The numbers on Netflix were exactly what we had expected. We're always kind of looking for the quote unquote canary in the coal mine, right? Little tells in the marketplace that could potentially divine for us what a future directional move might look like. And I do think it's interesting. And again, I hearken back to not too long ago when the market was, hitting newer and newer all-time highs every single day, day after day after day. And then we started to come down. And one of the canaries in the coal mine, if you will, that started to appear at that point was during earnings season, during the last earnings season, we had a lot of this going on where a company, there's expectations, right, set by the street on what their earnings and revenue should look like. They blow it away, they surpass what the street's expectations were, and the stock still falls, which is what happened here with Netflix. And that, that happens for various reasons. It's hard to really pinpoint and say exactly why that happens, but the general consensus is that, even though it beat the expected earnings, investors aren't satiated with that. They want even more. They wanted even better growth. And it's a little bit of profit taking. It just implies that this is a vehicle, in this case, Netflix. This is a vehicle that has gone up quite a bit over time. And these are opportunities for people to start taking profits off the table. So again, I don't know that just implies or means that we are, topping out again here and getting ready to go down, but that's usually a sign that we're headed that way, right? So anyway, we were able to book a pretty good profit. It's about a 50% capture or so. Some of you, I saw in here, some of you got a lot better fills on that. So that's great. One quick one-day turnaround on that, and that was a nice trade. Our CL trade is kind of working like we had hoped that it would. It has been very, very strong. You guys know that oil has been very, very strong. It's been pushing, but we do see some exhaustive sort of indicators in there. Doesn't mean that it's not going to continue to push higher, but we do see some exhaustive indicators in there. And if you look at the candles, it's very stereotypical. If you look at the charts, well, let's not just talk about it. Let's do it. It's very interesting if you look at that. And let's pull in here just a little bit. Let me pull these down to a more. We don't need our indicators to be this big. Let's see if I can grab this and then pull this. Come on. There we go. Pull that down, and then let's let's magnify this just a little bit. You see these candles right here, all the way through here are, sort of, there's a little, they're being compressed right there. There's a little compression right there. But generally speaking, you can see the length of these candles, right? All of these in here have a very similar ATR. And then we get right here to this day where we start taking off. This was on the 8th. So, about 2 weeks or so ago. And the candles start to compress. That's a big indicator right there, starting to compress a little bit. So we are getting a little bit of a topping effect there in our oil trade. I mentioned this before that one of the challenges with these commodity trades is that they have monthly expirations, right? And so we only have the ability to be able to trade them on a monthly basis. And sometimes the technical setup, we generally don't like to be in them more than 3 weeks, more than 21 days. And sometimes the technical setup on them is it is not optimal for the timing. And that was, I think, maybe a little bit the case here. We've got in the CL trade, we've got 27 days. It's about a week longer than I would like to be exposed to this trade. But the technicals were there at the time. And if you look at the numbers were pretty good, about 20% ROI potential. Again, I don't know that we're going to hold it to expiration, but the numbers are pretty good on it. $1,500 in on the trade, $300 of income coming in on the trade. Already moving into the green. So that's good. That's a positive for us right there. Ulta, this was a nice trade. I'm going to be booking profits on this today. 2 more days to go on this, and we don't need to stay in that any longer. We've got, I don't know, 90% capture or something on that right now. So it looks really good right here. I'm pretty happy with that trade. That was a very quick profit on that trade. My wife likes to shop at Ulta, and I told her I got her a $200 gift card, and she's like, who gave it to you? And I'm like, Ulta gave it to me, but it did it through the stock market. So pretty good trade. We'll be looking to close that out. I'm going to be looking to book profits on the NDX trade. I'm going to be looking to book profits on the Ulta trade here shortly. Our Shopify trade is doing well also. This is was a 3DT. It's got an expiration for this Friday, and it looks pretty good. It's moving into the green right now, 95% probability of success trade. And we're getting very close here as well to a 50% capture on that. So we'll look at that here. BBBY looks pretty good. Pretty happy with BBBY. And guys, I am trying my best. I am absolutely trying my best here to get a wheel trade that actually goes to fruition. So we'll keep working on it. We got a couple more in here that we've input, but it looks good at this point right now. We did get a what would it have ended up being? A 3DTE. We got a 3DTE going on the Qs. It looks okay right now. We haven't broken into the profit zone on it yet, but we've got 2 more days to go on that. And we'll see where the NASDAQ obviously goes today. That will be a big determinant on what we do there, but we may have a put leg for that today. So we'll take a look at that here today as well. I just don't know why I can't get my son's account to update here, but we'll look at it again here in just a moment. Okay, so anyway, looking at what else do we have? We talk about DAL. DAL is another wheel trade. You can see on DAL that we've got kind of a pretty solid bottom down in here. If you look around 39 or so, $39 a share, kind of right in there, maybe 38.50 if you will. There's a pretty good bottom in there, and we've got the 37 strike price puts. So I think that that's going to be a pretty good wheel opportunity trade for us as well. And it's got a good ROI if we don't get into it as well. Our IWM trade, boy, these trades have just been gangbuster for us. They've just been awesome. I've really enjoyed these, sharing these with you guys. Again, these undefined risk credit strangle trades. They're kind of what I focus on and kind of what I do I wouldn't say exclusively, but they're kind of what I focus on in my larger account. And a lot of it is just because they are so consistent, and they're so consistent because they're easy to adjust. Or I should say that they're easier. They're easier to adjust, right? Than a spread trade of some kind. So I do like them from that standpoint. Again, that trade, we're generally looking in a non-portfolio margin account. We're looking for about 1% a week. And that's what I wanted to share with you guys. Well, we'll talk about that in just a second. The power of just making 1% a week, the power of a 1% a week trade. I think that's an important conversation to have. Yes, and I'm getting to the other one that will refer to that as well. CAT, we've got a full iron condor going on CAT. It's got a good looking chart. If we go out a little ways here, it's got a pretty good support level down here. It's got a pretty good resistance level up here. We're coming into contact with the 50 and the 100 and the 200 day moving averages. Those are all kind of converging on there. It looked like a pretty darn good setup for CAT. We're not quite into the profit zone. Obviously, we just put it on right now. It was a 10-day trade, so about a week and a half long trade here, but pretty good numbers on that. It was again about I think 75% or so POP when we put it on, and about 7% ROI potential on the trade. We've got X, we've got United States Steel, we've got another undefined risk trade going on here with that. Short the 20 puts, short the 23 calls, pushing up a little bit here today, but I think that, again, I think that that we should be able to, Tony, the red is surging. That's what my quote machine says too. Thanks though. Thanks for the update. I think that on the X, it should be very much like the IWM trade, where we should be able to adjust it quite easily if needs be. The numbers were really good on that as well. Now, let's see. JMIA, Jumia Technologies. Okay. So nope. Is that it? Let's see. No, maybe it was. I think it was X. I'm going to talk about that here in just a second again. Jumia Technologies. Let's look at that. That's another wheel trade that we're looking at. The charts on this look great. The charts on this look absolutely great. I won't get into all of the technicals on this trade, but you can throw a bunch of indicators on here, and this just looks really, really good, this chart right here. Got a little bit of overhead resistance here in the 100-day moving average up at just under $23 a share. That gives us plenty of upside in that. I'd love to own some of this at 18. And the biggest thing with Jumia was just an absolutely incredible rate of return potential on this trade if we don't get exercised. Okay, just really, really good on that. Really happy with that. Okay, just for a second here, a second to the X trade. I think it was the X trade that someone was talking about. Maybe, I don't remember which trade it was. It was one of these trades. It was one of these very small trades that someone said, oh, it was the X trade, right? And this trade ended up being like a 3% ROI potential for the week. 3% ROI potential for the week. And somebody made the comment, why bother? Why bother? And I think that the reason that they said why bother was because the income on the trade was $14. So we need to talk about this for just a second. This number means nothing. That $14, that means absolutely nothing, right? We've talked about this a bunch of times, but I obviously need to come back and revisit this. When I first started trading, and you have $1,000, $2,000, $3,000, and your mentor's trading $1 million or $2 million, and we would do the exact same trades. And I would make $20 profit. He would make $2,000 profit. And he's like, it's great. This is awesome. What a great trade. I'm like, I can't even buy lunch with this. And he's like, and here's another one of our mantras, right? Here's another one of our mantras: trade to trade well, trade to trade well. 1% a week. This is a 3% return potential for the week. That's more than you need to get rich on, right? So you position size however you want to position size, or however you can position size, but it's about ROI. And that's what I was talking about. Where is it? I'm going to pop over here for just a second into the bonus training channel. And let me pull this up. So I put this in the bonus training channel here. So this is obviously applying to a portfolio margin account. That's where the $150,000 comes from. Again, you can trade whatever amount that you have, but this would be a portfolio margin account of $150,000 over 5 years, trying to generate 1% a week, not 4% like this trade has in it, not a 4% return, but a 1% return per week. So, quite a bit less. And then saying, and this is the average right here, that of the 52 weeks that you're going to trade, only 45 of them work. So we're only compounding that 1% over 45 weeks rather than 52 weeks. That turns 150,000 into just about 1.4 million bucks in 5 years. Okay. Now, is it better to start with 150,000 versus 1,500? Yeah, it is. It definitely is. But you know what the very, very, very best amount of money to start trading with is? Whatever you have. Whatever you have. Everybody asks that all the time. What's the best amount to start trading with? And the number is whatever you have. Whatever you can start with is a good number to start with, right? So anyway, this trade right here, this $14 profit trade, may be one of the most amazing trades you've ever seen. Whether you interpret it that way or not, that's a different story, right? That's a different story. But I would say that it is perception that is what kind of throws us off from our trading. So focus on ROIs, and that levels the playing field for all of us, right? Yeah, I mean, and Tracy, look, it's always dangerous, right? It's always dangerous to make extrapolations of any trading strategy and go out a year, 5 years, 10 years into the future, because you know that those numbers are going to be wrong, right? Your results are going to be better or worse, but they're not going to be the same. It's just too many assumptions to be made there. But I tried to do a couple things conservative. I didn't show any compounding, right? There's no additions. I didn't add any compounding into it. Adding that money back, adding your profit back in there. I didn't have it be successful every time. But anyway, the point is, whatever the number is, it's good, right? It's good. So kind of comes back to what we've talked about before. You really only do need, if you can be consistent, right? If you can be consistent at your trading results, you really only need 1%. You need 1% a week. And you'll be very nicely compensated down the road if you can do that consistently. So the JMIA, it's 18. Stan, it's 18 strike price put on that. And again, really good numbers on it, right? If we don't, again, normally speaking, in a wheel trade, we're looking for 1 to 2% a month in cash flow if we don't get exercise. And this is off the charts. This is really good in terms of both how much I would like to get into this position and start cash flowing it, as well as how happy I would be with the ROI on the trade if we didn't get a sign. Okay. I think we talked about CAT, we talked about X, Apple. So I need your guys' help. I need your guys' help on a couple of our positions, AAPL and our coin trade. And we'll get to both of those here in a second, but I need to just, I think I have them, but I want to just verify our start dates on both of these trades, just so that we're all on the same page, because I do want to get into, and we'll get into our coin trade here in just a second, but the coin trade is a little trick here because I have to subtract out my buys and sells of those 5 or 6 shares that I own. So it makes it a little bit more complicated to calculate those. Okay, so everybody, I'm seeing 914 on Apple. Thank you for that. And then if anybody knows on the coin trade, pop that in there as well, and we'll talk about it. Okay, 927. Ron, you're saying 920. I think that's what I had to. Okay, just wanted to confirm on that, and then when we have some time today, we'll come in and we'll go through those and look at those. But the Apple trade is plugging right along. The Apple trade looks really good. This is where we try to get. It's hard to do. It's a tough thing to do, but this is where we try to get. This is the type of trade, this Apple trade that we have going on right now, the leap covered right or the poor man's covered call. We do quite a few of these inside of the asymmetric trading system. And this is, again, it's hard to do, but this is where we try to evolve those trades to, again, where you see that we have just kind of the best of all worlds. If Apple goes to the moon, if it goes to $1 million, that's fine, we make money. If it doesn't go anywhere, that's fine, we make money. And it actually, at this point now, can go from 149 all the way down to 144 in the next 9 days, and we don't lose any money. We still are making money then as well. So we really have the best of all worlds here. We may still look today for an opportunity to maybe add a call leg in here and enhance that just a little bit, but I don't know that we really need to. We're starting to cash flow pretty well on that. And we'll, again, when we have a little bit of a lull today, later in the day, we'll look at both Apple and coin in the history tab and see where we're at on those. Okay, but it looks really good. I'm really happy with that. CVI was our bracket trade. We hadn't done a bracket trade in a while, and this was a bracket trade that we put on yesterday, and it looks like it kicked me out at a $38 loss. Again, if you are not in the asymmetric trading system, we use bracket orders there quite a bit, and I love them because they're just obviously completely automated. They're just completely automated. You don't need to do anything with them, and it just manages itself. It'll either take you out at a profit or it will take you out of a loss. So very nice from that standpoint. Our CL trade, we talked about that. Our silver trade is pushing up. Our silver trade is pushing up. I had thought yesterday we were in a pretty good position to take maybe a 40 or a maybe a little bit better, but somewhere around a 40% capture rate on our SI trade, our silver trade. Didn't do it. And so we'll have to look at that here a little bit closer. Silver's pushing, and if it can push past a little bit of the resistance that it has here at this level, it could be off to the races. So that might be a trade that we want to manage today, potentially even just close down. But we'll look at that as well as the day progresses. TDoc, Teladoc, Health, This is a full iron condor that we have on. It's fairly well positioned. We got 2 days to go in that. We're short the 144 calls on that, and it's still okay. It's pushing a little bit today. It's up almost 1% on the day today, but we'll watch that a little bit more. Coin is the other trade that we need to get into. This is not reflective, obviously. This number right here is not reflective of our overall P&L. We're not in the profit zone on coin, but we're not too bad either, because of those protective call legs that we had in there. We were able to book quite a nice profit on that particular segment of the trade, brought in a little bit extra income rolling up the put legs as well. But we need to get into the history tab to go through and look at that. I need to extract out those share purchases, buys and sells, to get an exact number of where we're at on this. But we'll continue to work that. There's quite a confluence of things going on with coin right now. Primarily Bitcoin soaring to new all-time highs. That obviously has a direct impact on coin. And then the BITO, the ETF that is on the Bitcoin futures, just came out, just started trading yesterday. And of course, that is all creating some hype around Bitcoin as well. And so that's all being reflected in coin. Coin, as you know, is volatile. It's one of the things, though, that we like about it. Let's just look at the 16 days, because it's got nice IV, right? It's got nice IV. So this is a trade that's pretty easy to continue to roll. It's a trade that's pretty easy to adjust, but we need to look at it here today and kind of see where we're at in it in an overall situation. Okay. My ES trade, my E-mini trade. So you know that I cut that down from 2 contracts to 1 contract. My goal with the E-mini trade, if the market is going to continue to push up, my goal with it was to bring in about $3,000 a week in income. I obviously have 1 contract now rather than 2. So now my goal is about $1,500 a week in income on this. I did put a put spread down here yesterday, I believe. Is when I put that on, and you can see that I brought in just around $700 of income on that for essentially a 1 DTE is what it ended up being, right? Basically a 1 DTE. And so I'm pretty happy with that. Again, if I can do that just one more time this week, that would put me pretty close to the $1,500 income target for the week. And again, if I can bring in $6,000 a month approximately on this 1 contract from a cash flow standpoint, I think that this number right here, that works itself out over time. So I'm going to continue to probably hold that short position and just continue to cash flow it, probably cash flow it in the way that I did yesterday with a put spread rather than just a normal cover, because it gives me a little bit better bang for the buck. Well, I would have it at this point, with how high the market has pushed up above my short position, it'd be almost impossible to bring in $1,500 just with a simple normal cover. Probably wouldn't work. Okay. We've got the Russell trade going on, and we've got a couple of different iterations here we've got 3 different iterations, right? And when we come back from the first break here, I'm gonna reboot my son's account and try to get that up so that we can look at his version of the 0 DTE. But let's talk. So we got 3 different rut trades going on. We've got 2 that are essentially 0 DTEs, but really just 1, right? We've got a 0 DTE on the Russell going on in my son's account. And then we have a trade here today on the Russell that is expiring today. It wasn't a 0 date expiration, but it's finally expiring today. And then we've got one that is expiring on Friday, 2 more days out, right? So our trade that is expiring today, that's in the profit zone right now. You can see that there's here's the put legs right here on the version that is expiring today. There's no extrinsic value left in that, so no value left in the put leg. And there's a little bit here left in the call leg still, but that leg is in the profit zone as well. 23.10 is the short leg there. So I'm probably going to let that run for just a little bit longer today to kind of see if we can get a little bit better capture rate on that. The one that expires on Friday, 22.30 is the short put leg. So that's 70 points down. That's probably okay. 23.15 is the short call leg. That's 22 points or so higher. So that one's a little tight. That one's a little close. So we'll have to watch the Russell today and see how that develops. And then we've got my sons that we need to look at if I can get the darn thing booted up. And then last but not least on here, we have our SPY trade. Was a 3 DTE, I believe. No, maybe a 4 DTE. I think we did put this on Monday, maybe. I can't remember when this roll was put in place. But 454 is the short call leg, and 452.50 is where we're at right now. So again, I think it'll just be interesting or help us with a little bit of insight to know where we end up finishing today. All of our indicators again are still bullish, and everything is still pushing accordingly, as the indicators would imply that they probably would. But we are seeming to get a little bit tired up in here. So we'll just see how that develops a little bit more as we go. So a couple things here now, as we have gone through those that I want to get into. I am going to probably look here. Remember, I said on our 0 DTE that I was looking for a little bit more than 50% capture rate on this, and we're there right now on our 0 DTE on the NDX. So I'm probably going to work on capturing that. Let me get rid of the closed tab here. We've already done the Netflix trade. We've already closed that out. And I'm probably going to look at closing the shop trade because we're kind of getting a little bit of a reversal here on that. And I want to be able to get out while it's still green. So there's just a couple little trades here that I'm going to be working on. And while I'm doing that, I'll try to reboot my son's account so that we can look at the Russell trade in there as well, the 0 DTE. So I'll be back in just a second, and you should see some trades coming through here in just a moment. Okay, so just working through some of these real quickly. I did book a profit on the 0 DTE on the NDX. A little bit better than a 50% capture, which this early in the day, that's awesome. Can't be too unhappy with that. Got out of the Shopify trade at a very small profit. Price action didn't look very good, so I was happy to do that at even a break even, let alone a tiny profit. So got out of that. Looking at a couple other trades here as well. I do think that I'm going to go ahead and book our profit on our weekly credit strangle on IWM. We're there. We're past where we want to go in terms of getting our 1% a week cash flow on that. So I'm going to book it. I'm going to book that profit. So that'll be the next one that I'm working on. And then a couple other ones here that I'm just going to look at in a minute. Okay, locked in the profit there on our IWM trade. Moving over to the Russell now, going to go ahead and book the profit on the Russell trade in our main account here. So again, we've got three. We've got the 0 DTE going on in my son's account. We've got the 2 DTE here remaining in our main account. And then one that is expiring today. I'm going to go ahead and I'm going to close that one out, book the profit on the one that is expiring today. Okay, so I'll be working on that next. Okay, got the Russell trade. Again, not to make anybody confused. Got three different Russell trade going on. 0 DTE in my son's account, a 2 DTE over here on our main account, and then another Russell trade that we put on yesterday that's expiring today, that's the one. The one that is expiring today in our main account, that's the one that I just took off the books and booked a profit on that. And so now we've got 2 Russell trades still going on. The 0DT. I don't know. I'm going to have to pop over to my other computer and put up a screenshot of that. I don't know what is happening here when I'm trying to pull up the Russell in my son's account. When I click on it shows the position. When I click on it to expand it, it disappears. So I might have to do that on the other account, but you guys know the number, right? 2290 is the short call leg on the Russell 0DTE. So we're just right up against that right now, but we've got obviously some time. So it's not something that we need to really concern ourselves with right now at this point. Our other Russell trade here is again 2 days to go here in this one. It looks pretty good. It looks okay position wise. I am next trade that I'm looking at. I think I am going to go ahead and book a loss on the silver trade. The problem, of course, as we know with the commodities, is our next rollout on this would be 34 days out, and I don't want to sit 34 days in a commodity trade. So I'm down $40 on the trade, $50 on the trade. I'm going to go ahead and probably just book that, just take that loss on that. Try reordering in reverse. The problem, Ben, is that it's his only position. So there's nothing really to reverse. I've had that happen before, and I've done that, and that's worked. It's only his only position in there. So I don't know. I'll play around with it a little bit, but we know where we're at, right? 2290 is the short call leg. So at least we know the number here, but I'll get it pulled up here. We'll get it working at some point here today. But anyway, I'm going to go ahead and I'm going to book a small loss on the silver trade because silver's been coiling for such a long time, and it hasn't gone anywhere. And we may be at a little window here where it finally is going to go somewhere, which again would be great for our AST program. We do have a silver position in there. 4.5 cents is what I got on the silver trade. So that is a little bit of a loss on there, but I feel better taking that off of the books. So I'm going to put that into our trade inputs. Okay. Get that input. And we may come back 2 weeks from now, maybe 2.5 weeks from now, and re-look at the silver trade, look at what's happening there. But we'll see. We'll see how that goes. Okay, I'm gonna take a look at a couple more here, and then I'll take a little break and kind of jump over into my son's account and see what I can find there. Okay, very quickly, you'll see that I did re-enter a 0DTE on the NDX. Once again, back into the NDX, call legs only here at this point, at about $1,200, or excuse me, $12,000 into it, brought in about $1,100 in premium on that. If we open the close tab and we can see what's going on here. Well, let's tighten that up. We're already up $1,100 or $1,200 on the day. No, that's our net gas trades. I'm sorry, excuse me. I already have about $600 on the day. And then we've got about 1,000 or so left in our current iteration of the nat gas. We'll just close the day. We'll just finish the day here. In our current iteration of the 0DTE NDX trade, which is just calls only right now at this point. But good numbers, good numbers today coming in on the NDX, both in terms of price action and also in terms of just good strike prices with good deltas, with good premium and everything. So you guys know the deal. All things being equal, we would always prefer to trade the SPX simply for one single solitary reason, and that's just the liquidity that it has. But the numbers were just pretty enticing today on the NDX. So we'll let that work for a little bit here. Again, I would kind of hope for the same thing, maybe shooting for about a 50% capture rate on this particular iteration of the trade. So, you know, 15,413 right now is where we're at. And let's get rid of the close tab for just a second. 15,480 is where our short leg is. So we'll just kind of let that work for a little bit. And, you know, again, whoops, where do we go? Where's our nat gas? Nat gas is right there. Where is our, what just happened to my trick? NDX. There we go. Good grief. I'm having a struggle this morning. $500-600. If I could get, you know, there's $1,100 of gross premium coming in on the trade. If you could get $500 or $600 more on that, that would put me at a nice income for the day, and it would put me at a nice capture rate. And it put me at a great ROI for the day too, as well. So that's kind of the target for this iteration as well. We'll see how that develops here over the next little bit. And we may be able to put a put leg in here as well. I don't know. I'm gonna take a look at that here right now. I'm working a put leg here, but I can't quite get a fill on it. It's the 15,310s by the 15,280s. And I'm quite a bit off on my fill number here, but I think I'm still in a good range. So let's see how low I need to go. I don't want to go below $1.23, and I'm already at a mid price at about $1.25. So we're quickly heading there. I might just leave that as a working order. I can come down. I can come down to $1.23, but that's about as low as I want to go. At least with this strike price. So what I'm going to do is I'll just capture this strike price and put it in here as a working order. If it fills, that's great. If it doesn't, we'll make some adjustments. Okay. Got that in, got that working. Okay, let that work for just a little bit. Well, it didn't take too long. Didn't take too long. Got that fill at $1.23, and I would have preferred $1.35. But $1.23 is still in the ballpark. So let me get that input. Okay. And now the numbers are Obviously better, right? Just let me just refresh my cap requirements quickly, just to make sure that's updated. Yeah, that's about right, about 12,000 or so. Well, again, if you look at your cap requirements in DX, $10,300, that's your actual buying power that's tied up in that, because you subtract out your income that you bring in on the trade. But anyway, let's call it $11,000, bringing in almost $1,600 of gross premium. So not too bad in terms of premium generation. And again, anything close to like a 50% capture on that would be lovely. It would be great. So I'm going to continue to watch that. Obviously, we're watching the 0DTE Russell trade as well, right? We're pushed up against these levels. I think that maybe coming over here to the chart action for just a little bit might be a good way to just kind of spend our time on what we're focusing on. With the Russell probably being the main one that we're looking at. A lot of the stuff, and again, I won't, spend a lot of time going over that, but a lot of the technicals and a lot of the internals that I'm looking at make me feel okay. Not great, not bad, okay. Make me feel okay about where we're at on the Russell trade today. The 0DTE, I think it's still maybe a little too early to talk about or look at our 2DTE Russell that is expiring on Friday. We'll let that thing kind of work its way through the day today, see where we're at with that at the end of the day. But I'm kind of okay here with the price action on our 0DT. We'll watch it for a little bit here, and the market here, we're at a very binary level on our Russell 0DTE, right? It's either going to work at this level or it's not. So, it's pretty easy at this point where you're almost at an at the money position to say, obviously, if it goes up, we got to take action. If it goes down, we do nothing. So we'll just kind of watch it for a little bit and see where we go there. And I'll check back in. I'll check back in just a little bit, unless, of course, you guys have any questions. Okay, I try to do a formal check-in with you guys at the top and the bottom of every hour, because I know not everybody can just sit on Zoom all day long. Just a quick update for you. I did look here at potentially adding another one of those call spreads on top of our Apple trade to juice the returns just a little bit. And a couple of things on Apple right now as we look at it. Just looking at a couple other trades here. A couple of things on Apple right now. Number one, we only have 2 days left to go in this option expiration cycle. And I think that a 152.50 is a little close right now for doing anything. And that's where we would really need to be to get the premium that would do anything for us. And number two, we do have Apple. Where did we go here? Let's get to AAPL. We do have Apple reporting on October 28th after the bell. And so we would not be able to really get anything for next week at this point because we don't really want to be in it while it's reporting with limiting our upside on that. But I do think, again, we can take a look at our history tab here on Apple. And again, thank you guys for giving me those dates here this morning. Apple 9, let's go to just filtering trades. And it was 9/14 we said was the start date. And let's go through today. Just do a quick refresh just to make sure that these are all updating. Okay, so again, we've got our debit down in here on the 14th when we bought our long position, and that's a debit trade, right? So that obviously cost us $2,900. And then we've got all of the cash flow that we have generated on top of that between now and then about $40 or so in fees and commissions. So let's call it $2,000 here. Let's say that we are about $2,000 in the hole on the Apple trade. And then if we just backed out our long position that we had the debit on, do a quick review, it would cost us about let's see, $865, right? So we're in a nice profit zone. We would bring in a credit of $2,700. So about, what is that, maybe $700 plus dollars to the upside on the Apple trade, which again, it's a lovely, it's a wonderful ROI. But the thing that I think is most impressive about it is, obviously this last week or so of trading has definitely helped our position. But you can see for the vast majority of the time that we were in this quote unquote bullish trade, Apple's done nothing but go down. And so it was the cash flow component of it that has rescued that trade. So again, we are showing down $200 or so here now on our open position, but just keep in mind that that's not including all of the cash flow that we have brought in on previous positions. And it's also obviously not reflecting whatever credit we would get if we closed out our long leg. So with all of those things being said, and with the fact that Apple is almost at $150 a share, and we are essentially protected in this trade down to 144, I don't really feel, and the fact that we've got earnings coming out, and the fact that we've only got 2 days to this expiration, I don't think that right now we're going to want to or even need to add another call leg to that. So I just wanted to share that thought with you guys while we are working through the rest of our trades here. And then I'm going to look at a couple other trades here just momentarily. And then we'll get into the coin trade as well. We'll kind of look through that, see where we're at on that, because I think that we might we made quite a few alterations to the coin trade to enhance that trade yesterday. I think that we might possibly do some more on that today as well. So be back with that maybe, let's say maybe sometime just before the top of the hour. One quick note, one little quick note of update here as we're progressing. Just wanted to get this out before the top of the hour. Our second iteration of our 0 DTE today on the NDX. Again, I pretty close to what I had in the first one or so capital wise. Got about 12,000 of capital into the trade, brought in about $1,500 of income. Looking for once again around that 50 or 60% capture rate. 50% would be fine, actually. So something around $600 or $700 capture rate on that would be good. And it's just now getting back into that profit zone, which is kind of nice that it's this quick to take place, this quick to materialize. So we'll just let that work for a little bit while longer, but obviously keep your eye on that. That's one of our that and our 0 DTE on the Russell. Those are probably our two main areas of focus right now. Okay, I am working, as you may have seen here, I am working a put leg on our Q trade. So this is what I'm working right now. I'm working the 370s by 368s. Now, this is a 2-point spread right here. This is a 2-point spread, and our current call leg that we have is a 2.5 point spread. So you can do just a few more contracts on the put side to equal that out. Okay, I've got 6 contracts on my call side of this, and I was able to do 8 contracts. before it went from a credit on my buying power to a debit, right? So that's all you're looking to do, is get to where you're not at a debit on your buying power on the put side. Let's see if we can get an execution on this. Nat is at 12, and you can usually get the mid price on these. There we go. That into the trade inputs. And then we can take a look at this and see what the numbers look like. Let's see. Let me make sure that added right. Yep, that's in. Okay. So let's take a look at it now and kind of see where we're at on the Qs. We're right where we always wanted to be. I think, again, one of the things that we admire so much in trading is discipline, right? Really good discipline on your trades. Having the ability to walk away from a trade when your capture rate isn't there, or your ROI isn't there, maybe walk away from a trade if you can't get the fill price that you think is necessary to make the trade make sense. All of those good things. I think we illustrated some good discipline, not once, but I think twice this week, maybe 3 times this week on the Q trade, where the numbers just weren't there. We could have maybe forced a 4 DTE together at the start of this week on the Qs, but the numbers just didn't look good. And here we are well into the week now, right? We've initiated this trade maybe later than we ever have. We initiate these trades all the time on a Tuesday. Sometimes we'll skip a Monday and do it on a Tuesday, but rarely do we wait until a Wednesday. And the numbers still hold up. Obviously, we've got half of a week to go here to still see the fruition or the end result on the Q trade, but the numbers are actually slightly better than what they are on average, where we're trying to normally get about a 10% potential ROI, and here we're sitting at well above a 10% potential on that. And that gives us, again, it gives us a little bit of latitude or a little bit of ability to have lower capture rates than normal and still come out with an ROI that is pretty good. Matcha, yeah, I've been having trouble all day long I did what Ben suggested in my son's account. I was able to add, well, you can see the working orders. Well, yeah, I showed you, I did a screenshot of it, but I had to put a working order in there that has no chance of getting executed for the trade to even show up. So I know, a little frustrating when that happens, but anyway, just wanted to update you on the Qs trade. We'll be back at the top of the hour. Okay, I've got another little adjustment for you to take a look at, and this time it's on the SPY trade, our 4 DTE SPY trade, and just rolling up the puts is what we're looking at here. So you can see we're going from the 436 and 438s to 444s by 446s. So rolling those up, it's always a little challenging to get a feel here. Nat price is down at 5 cents, so that's probably what I got to go to. But that'll add a couple $100 of potential income to the trade, and I do get filled at that 5 cents at the Nat price, and that's pretty much always what you're going to get filled at on the SPY trades. which is actually a good thing. There's enough there. That's actually, you know, the SPY. If you Tastyworks has these filters, and a lot of brokers will have a filter that you can run for the highest volume or most liquidity. This type vehicles that you can go trade, and the SPY is perennially at the top of that list. So that liquidity is nice for spreads. Obviously, the spreads are very tight, but it does mean that you're not going to really, you know, split the difference on those. You're going to get the net price on that trade pretty much every single time. Okay. So I've got that one rolled up a little bit here, and we'll check back in again here at the top of the hour. I am, as I said, I am going to come in here also on our trades, and I'm going to book a profit on that Ulta trade. That worked out quite nicely. There's really nothing left in it. There's really no reason to stay in the darn thing for 2 more days. So I'm going to go ahead and close that down. Let's see if I can get a competitive price on that. Does look like I need to close both legs of that, including the long leg. It does look like there's a bid on that. That bid might go away as I try to work this. So I'm going to try to go 4 cents on the debit, and we'll see where that puts me at. Doesn't really move the pricing at all. Let's try 6 cents. Nothing there either. Still not moving the pricing either. Pretty big spread there on that leg. I don't know. You know, I'm looking at the trade. Brought in about let's say $245 in premium on the trade. So I don't want to give back a whole ton of that, especially with how well it has performed. I'm at 6 cent debit right now. Let's try 8 cent. Okay, that's okay. That feels. It cost me 30 some odd dollars to book that profit, and that's a nice profit. So I'll take that. Okay, there we go. All right, that does take us to the top of the hour. Russell is still kind of hanging out here at these highs of the day. We can see it in the charts there, hanging out at those highs of the day. So we'll give that a little bit more time to work here and see where it goes on the day. Our current iteration, our second go at a 0 DTE on the NDX is it's working in the right direction there. Again, you know, I said I'd like a maybe $600 would be a good target for me on the profit scale, capture rate wise. So it's working in the right direction. We'll just give it a little bit more time here and let it work. And of course, we'll keep an eye on the Russell trade as well. Okay, just a couple quick updates here for you. So number one, you probably saw there my entries on my short ES position. I went ahead, I brought in around 750 or so dollars on the put spread that I put on yesterday. Got out of that today at pretty close to a full profit. There was a little bit of a debit, obviously, cost-wise there to get out of that, but pretty much booked a full profit on that. And then I redid that put spread for a Friday expiration, so two more days to go on that one. And brought in about a net of another $750. It shows almost $1,000 of gross premium brought in there. But you know, the futures are very expensive, right? So anyway, I am on track for this week to bring in about 15, well, actually a little bit better than $1,500 in income on that short position. And again, it's always a little bit dangerous to sort of extrapolate out results. But you know, $1,500 a week, you know, $6,000 a month in potential income off of that one position. I think that this position right here, that can kind of do what it's going to do, and I'll still end up pretty nice in that overall result as time goes by. And again, we're obviously not back to all-time highs, but we're getting there, right? We're getting there back to these all-time highs again, which just reiterates to me how important it is to have something hedging or protecting the downside of your portfolio. So I do think that even though all of our indicators are flashing bullish, and the market is obviously bullish here, that I do feel comfortable holding that short position, continuing to cash flow it. And again, kind of have a target or a goal of about $1,500 a week in income from that one position. So we'll continue to monitor that. Our second 0 DTE today on the NDX, we're pretty much there. Again, I re-upped with about $12,000 in that trade, brought in about 1,500, said I'd like to get around that 50% capture rate, and we're pretty much there. We're pretty much there right now. So I am going to go ahead and I'm going to book my profit for the second time here in our NDX 0 DTE. Let's see where we end up fill wise. That's always the question on the NDX, right? Well, let's work it a little bit here and see what we can get. I don't think that I'm too far off. Let's try another 5 cents. Maybe I am a ways off. I don't know. I thought I was pretty close. I thought I was pretty close on it. Well, we'll give it another couple of tries. And if that doesn't work, maybe just let it sit for a little bit. Okay. All right. That's not too bad. It's maybe 5 cents more than I ideally wanted to pay, but 5 cents, it's not too bad of an overall result there. And so let me get that one into the trade channel, and then I want to just see where we're at. Where we're at overall on it. Again, I think that my capital commitment to this trade was pretty close on both of those trades in terms of capital committed to it. And so if we open that up, let's see, NDX trade right there. Okay, so I ended up the day at about a 10% ROI on that. About 5% on the first one, about 5% on the second one. and had about 12 grand into the trade. So about $1,200 profit on that for the day. Not too bad, not too shabby. I'll take that. I like it. I think that that ended up as a good choice for the day today. We're kind of left obviously now with our Russell trade, so we'll continue to watch that and see where we're at on that. Ryan, I see a question coming in. How do you manage the ES spread if price starts moving the other way and testing the put spread? Do you have a mental stop loss? Yeah, so it's a little bit, it's a good question, Ryan. And John, you're not in, I'm going to just answer John here. Let me just answer him quickly. And then, oh, you are back in Zoom, Okay. I was going to say, it's going to be hard. It's going to be hard to type the answer to that, John. But Ryan's question is, how do you manage the spread if it starts moving towards the spread, right? It starts pushing the spread. Unfortunately, here in Tastyworks, if you put this into the curve, just make sure I've got the right position. There's my short position. There's the spread. Now, if you put that in the curve, it doesn't work, right? It doesn't give. So I use Option Net is a software program to illustrate this. There's a couple of other ones that you can use as well. But if you were to look at it, maybe let's do this. Let's just maybe, that's not going to work either. I was going to say, if we remove the short position, obviously you can see that we're okay down to 44.80, but that's not correct, obviously, as you know, because we've got a short position in there hedging that as we go down. The reality is that I'm probably good down to about 44.60. So it would be probably around 44.95. So about 35 points down from here is where I would look to probably roll that put spread down even further. So around 44.95 would be where I would need to make an adjustment on that. So hopefully that helps. Hopefully that helps. Okay. We're still obviously watching the Russell trade. I do continue, obviously we're very, very early in the day here, but I do continue to see not great, but not horrible. So we'll call it okay price action, fairly okay price action at these highs of the day on the Russell. So we'll see what that means as the day progresses here a little bit, but I think that you're kind of seeing a little bit now. Of course, the Nasdaq has been the one that's been on the rip, right? So it just kind of makes sense that that is maybe the softer one on the day, but pretty much for all intents and purposes flat on the Nasdaq. We're getting a little bit of topping there in the S&P, and that's kind of sort of illustrative to exactly the same thing, mirroring exactly the same thing that's happening in the Russell here. So I like that. It was a little bit challenging, maybe right in here. This is 8:15 a.m. my time, Mountain Time, and then you come over here to 8 well, is a little bit later, I guess. So maybe a little bit later, maybe somewhere in here 8:30 a.m. Mountain Time, my time, and then you come over here 8:30. And this is starting to dump while this is starting to pump, right? And so again, you generally, as you get further and further out in your time frames, those tend to sort of coalesce a little bit. And so it's nice to see these two indices, to see the S&P and the NASDAQ kind of topping a little bit, because then hopefully that will spill over into the Russell as well. So again, we're still just a little early in the trade. We'll let it work for just a little bit longer here on the Russell trade to see where we go with this. And then that'll give us a little bit better visibility on where we want to go. I'm going to go through just quickly on my own on my other computer here. I'm going to go through all of our other open positions, see if there's anything that we want to tune up there. We do need to look at the coin trade, right? See where we're actually at on the coin trade. And that one is probably going to be one of the ones that we'll be tuning up today as well. So I'll be back in just a few minutes. Just a quick note there, just wanted to make sure that you caught that I did add a put leg to our oil trade, to our CL trade, and it's pretty far down. So the income was not commensurate with what we got on the call side, but it does add quite nicely to the trade. It balances the delta a little bit on the trade. And now you can see the numbers on the trade. And again, of course, these are gross numbers, right? But about $400 of income coming in on a $1,600 investment. It's a month-long investment. It's a month-long trade. Actually just a little bit more than a week or 3 weeks at this point, but it looks pretty darn good. And so I think that that's a good balance, good mix to have back in on that trade. And there's a couple other ones here that I want to look at, maybe doing a little tune up on as well. So I'll be back in just a few minutes. Okay, let's take a moment here. We'll count this as the bottom of the hour update. And I do want to go through, we still have a couple of things that we want to talk about today, a couple of things that I want to go through, I think, from an educational standpoint that could be helpful to you guys, hopefully. And we want to look at the coin trade as well, right? To find out where we went through the history tab in our Apple trade, and that looks really, really good right now. So, you know, just a quick frame of reference here on the Apple trade. You know, we're so well positioned, as we said. Apple could go to the moon, we're fine. It could stay the same, we're fine. It could actually drop by almost $5, and we're fine as well. So very well positioned on the Apple trade. No capital gains, so to speak, potential in the trade. It's all cash flow at this point, right? And the cash flow amounts to $87, $88 right there, which is the amount of extrinsic value that we still have in that 144 strike price call. So that's out for next week. That's a next week expiration. But if we went to that and said that we did want to roll that out for another week, you can see that it would bring in about another $40. Okay, so the good and the bad of this trade now is that, you know, the good, of course, is that we're in the profit zone. That's obviously one of the main things that we want to focus on. The other things that are nice about it, though, as well, is that it's very safe. It's very well positioned. Again, we've talked about how it can go up, down, or stay the same, and we're fine on the trade. The bad of it is that our income potential on this trade, this $50 to $150 that we have been in a couple of cases where we added the call spread, over $200 a week in income that we have been bringing in on this trade. You can see now we would be down around $40, which is still $160 a month, almost $2,000 a year in cash flow. My goodness, we've got 2,000 in the trade, right? So if you can bring in 2,000 in cash flow in a year on a $2,000 investment, obviously that's pretty good. But anyway, my point, I think, in the Apple trade is that we may be getting to the point here where we need to make a decision. And the decision is, do you sacrifice some of your safety in the trade? Now, is there such a thing? Is there such a thing as building too much safety into a trade? You know, is the trade too safe? Because, you know, with safety comes a cost, right? And that cost is a lower ROI. So we could take a look at this and say, okay, well, let's roll this out. Let's roll it out to the next following week. But in terms of rolling it out, we're not going to roll it out at the same strike price and take that as a credit. We're going to roll it up 1 point and take it as a debit, right? So you gain 1 point of upside in the stock at the, so, you know, $1, right? $1 per share, $1 of upside in the stock for a 35-cent debit. Now you think, okay, well, that makes sense, but keep in mind that our long profit driver here, which is this April 14th, 176 days to expiration, 125 strike call, it's an 83 delta, right? It's an 83 delta. So again, what does this all mean? Well, let's say we roll it out for another week, but we raise it. We gain that extra dollar of profit potential. Well, that costs us 35 cents a share, but keep in mind that we have an 83 delta, right? So what that means essentially is that if the stock moves up $1 or we have another dollar of profit potential in the stock, we're not going to get the whole dollar. We're going to get about 83 cents of it. Okay. So, you know, the question is, does that make sense? Does it make sense to spend, this is a debit, right? So that would be an expense. Does it make sense to spend 35 cents a share to get another 83 cents a share of upside on the stock? It very well might, right? Because at 145, we're still fairly well protected here with the stock hovering above 149. So that's one thing to consider. The other thing to consider is you keep it as safe as it is right now. You bring in, you know, in this case, 37 cents. So that's maybe $150, $160 a month in income on the trade. The third, of course, consideration that could be made here is that we simply book our profits and take our money and go home and do something else with it, right? So those are some of the things to consider, some of the things to just think about, if you will, with regards to our Apple trade as we continue to trade it and go forward. Now, in anticipation here of making some additional adjustments in our coin trade, let's take a look at the history tab here, and let's see where we're at in coin. So there's I got to do a little bit of work here. I don't think it should be too bad, but I need to do a little bit of work here because for my numbers to match your numbers, I need to remove the share transactions that I was doing inside of here. So I know there's probably an easier way to drag and drop or something. Somebody will probably chime in here. There's a share order right there. So I've got to eliminate that one. There's a share order right there. So let me eliminate that. So this takes us back to, oh, whoops, these are too many. These are too many, right? We're just back to, we're back to September 27th is our start date there. Okay, there we go. So this should be an accurate depiction right here of eliminating the shares that I had in the transaction and kind of showing where we're at overall in the trade. Let's say that we're up $1,400 on everything that we have booked so far. Okay, so hopefully everybody's following along with that, those numbers, up $1,400. And now if you look at our coin trade right now, let's see where we would be if we just closed this leg right here. This is our call leg that is in the money. So up $1,400, and it's going to cost me about let's say $3,400. So about $2,000. About $2,000 is what I still need to work on the coin trade. And so hopefully everybody's kind of up to speed now on where we're at P&L wise on the coin trade. Obviously, it could have been way, way worse if we didn't have that dragonfly in place to give us some profits on that call leg as it got pushed through that. So we booked those profits. And I do think that we are, if you look at coin here, let's go look at coin. You can see obviously this big massive push as we have had the cryptos, primarily Bitcoin, pushing to these all-time highs, the release of BITO, which by the way is starting to trade options today. It has options on it now today. That might be a interesting play to take a look at as well. So we'll look at that. I think, you know, it's always a little hard to tell. It's always just a guessing game. There's so many cool things. The smalls, Tastyworks, as well as a couple other affiliates have brought out the smalls in the futures market. There's a lot of things that come out, ETFs. There's always interesting ideas behind ETFs. And you never really know when they come out if it's going to build enough popularity and momentum to get enough assets under management to create enough volume to create good spreads and good trading. So it's really too early right now in the BITO to know how that's going to develop. But you can imagine that it's going to probably be a pretty actively traded underlying. And so I think that that one might be a nice one. We can take a look at it. I know we're diverging from our coin trade here, but BITO, just because it does have, it's only traded for 2 days. So there's not a whole heck of a lot of data that we can get onto it from a chart perspective. But you can see, you know, the IPO yesterday, and then it's had a nice little run, little pop here today. But the thing that you look at, it does only have right now, it will probably change as time goes by, but it will probably, I would imagine, get some weekly options in here that we could trade. But right now they're just monthly options. But of course, you look at the IV, look at the IV on these, and it's pretty good, right? You know, we work so hard to try to find anything and everything to trade that has an IV of 50% or better, right? And here we are with something at 90, 95%. So I think this could develop into a very, very interesting trading vehicle for not just us, for everybody as a trader, right? So anyway, that kind of gives us an idea of where we are. But anyway, my point with all of this was you've got this coming out. You got a lot of activity in that. It's brought a lot of interest to the whole crypto area. You've got Bitcoin pushing to an all-time high. So all of these things have sort of combined to push coin up pretty high. I do think if we've got, I don't. Let's throw a Bollinger Band on here for just a second. So there's the Bollinger Bands, and you know, you can see even with that big push here that we have had, let's look at a correct chart. Here we go. This is going to be a little bit better. There we go. You know, we've been tagging this Bollinger Band now for 4 trading days as coins just been pushing and pushing and pushing and pushing. I do think that everything you could potentially look at as a technical indicator is implying that we are a little bit overbought here on these levels. We do have some time still to work with our trade. That's the real key with these dragonflies. Is usually they're about 30 to 45 days out trades. It gives us enough leeway with time to be able to make these adjustments as we like to work the trades. But I think that we've got a pretty decent chance here of looking at potentially getting a little bit of a retracement here. We'll see. We'll see how that develops as time goes by here. But we're probably going to work on looking at a couple of little adjustments here on the coin trade. So look for those here in just a little bit. I'm going to look at a couple different iterations of that. see what I feel like is probably the most efficient way to approach that. And then we'll be back in just a little bit. Okay, just wanted to double check, make sure that you saw that trade come through. We did roll up the put leg on the coin trade, brought in a little bit of extra income there on that trade. And I'm going to look at a couple of other little pieces to potentially add to the coin trade here as well. So just stay tuned on those for just a moment. Okay, I want to show you another 0 DTE that I just did on the SPX. It's a very tiny one. It's the smallest I can do. It's one contract. It is on the SPX. It's October 20th expiration. It's the 45-45 calls by the 45-55 calls. Just one contract. I got filled at $1. I'm going to keep talking here while I get this input so that I can get this up as quickly as possible for those that are not in Zoom. It's just one quick little trade, 1-to-1, 1-to-1 risk reward ratio. I got it filled for $1. I'll let it go to $2. Okay, $2 debit. $2 debit, max risk on the trade. It's obviously very tight on the numbers. Could be a 10% ROI on the darn little thing if it works. If it doesn't, that's okay too. Basically putting up $100 to risking $100 for the $100 credit, essentially. So here's the SPX trade right here. Let me get my cap requirements refreshed here. So putting up $1,000, bringing in $100, and I'll let that go upside down by about a 2-to-1 ratio, risking about $200 for the $100 credit. Okay, so we'll see how that develops. It's obviously pretty much. Well, I was going to say at the money. It's not at the money, but it's very close to at the money, right? So I'm going to watch that for a little bit. But I've got some nice profits that I have accrued today in the NDX. If I let that go $200 down on me today, this still put me up about $1,000 on these 0 DTEs today. Of course, obviously, we're still working on the 0 DTE Russell trade inside my son's account. So still working that one. But these numbers, I like these numbers quite a lot. So up and running with that trade now. Again, I'll come back here in just a little bit and get back to you with the coin, any future updates on the coin. Okay, working a trade on coin right here. It is on the call side, but it's well outside of the expected range for the next 2 days. And that expected range is booking in about $9.50 a day of movement. So pretty good potential movement on that, but great premium on that. About 90% POP on the trade with almost a 9% ROI on the trade. So that's assuming at the mid price. We got a ways to go here to get down to the NAT price. So let's see how far down we have to go. Not very far at all. 48 cents is the fill there. So that's not too bad at all. Not too shabby, as I like to say. We'll just keep chipping away at this. Again, I mentioned this, I think, on our very first Dragonfly trade, that I kind of hoped that it didn't work out so that you could see the power of the Dragonfly. That's kind of crazy to hope for that, but Um, I think hopefully going through those numbers, and we can go through them a little bit more detailed. I didn't go through the numbers in a very detailed manner there, I think, on the history tab on the coin trade. But you can see that we basically booked about an $1,100 profit on the protective part of the trade. So while we're still obviously down overall on the trade, that helped us immensely. That helped us immensely in terms of mitigating that damage, and makes it a little bit easier to continue to adjust the trade. Roberto, so again, this is the easiest way for me to remember to do this, or to remember this, right? You know, you got American style options, European style options, and then you got AM expirations, and you got all these different iterations of options, and then we have to worry about what is cash settled and what is actually assignable. The easiest way for me to remember what is cash settled and what is not is what you are trading, is it deliverable, right? So if we sell a put or a call on IBM, that's deliverable, right? If we sell a put, we get assigned shares, that there are shares of IBM that are deliverable. If we sell a call, we get assigned a short position, that's deliverable, right? So those are deliverable positions. Any index, the Russell, the NASDAQ, the SPX, whatever it is, you know, the SPX is incremental measurements of 500 different stocks, right? Well, that's not deliverable. You can't get a fractional number of shares in 500 different companies assigned to you, delivered to you. So that's the easiest way for me to remember. Is it deliverable or not? If it's not deliverable, it's going to be cash settled. So the indexes are cash settled. Okay. So anyway, you already knew the answer. Lefty had given you the answer, but that's just an easy little trick that I kind of use to kind of help me sort of just divine without knowing whether something is cash settled or not. Hopefully that helps. Okay, I think we're pretty up to date right now on everything. Obviously, we're still keeping an eye on the Russell. I'm going to come back to the charts for a moment, and we'll watch the price action here. Again, I do like sort of this flattening that we're getting in all of the indices. We'll see if it carries through or not. My goodness, we've had some pushes day after day after day after day. We're about what, a week and a half, something like that, 8 days or something like that, into the market just pushing higher and higher and higher. So, you know, even if the bull market is intact, and even if we continue to push higher over the next 3 or 4 weeks or whatever the time frame is, there's almost always at some point in there a little bit of a retracement and a little time for rest and recuperation in the indices. And we're definitely due for that. We're definitely due for that. So let's see if it can happen for us today, if we can get that little bit of retracement back here from these highs that we're sort of sitting on the S&P and on the Russell. Lefty, you just beat me to it. You just beat me to it. I was just going to say that our third, well, we got 4 really, you know, we're counting our Russell 0DT, but our third trade of the day on 0DTE that we are looking to exit, right? Still not exiting our Russell trade yet, but our third DTE today is at, if I can find it here in this morass here, it's at about a 50% capture rate right now. So again, you know, I just put $1,000 in, and so, you know, $50 is a 5% capture rate, and $50 is $50. Nobody's going to buy their own island in the Bahamas with that, but I think it's I don't know. It would have been a good capture. It's now down to like $40. But anyway, we're in that area there that you probably want to start monitoring it, start looking for opportunities to book profits. I saw someone asking, maybe Karen, it might have been earlier, about stop losses, and I've had a couple of people ask me about take profits too. Again, the easiest way for me on the take profits is just go to the trade, highlight it, and then when you go to close, you can close based on a profit, right? So you could set that at whatever you wanted, whatever percentage take profit you want. But I'm going to set mine at maybe a 45%. No. Sorry. 55% capture rate. Okay. And I'm going to put that in, and that'll draw the trade up for you already. It'll tell you that that's going to be a 45-cent debit. So I'm going to put that in. That again, that would be a 55% capture rate for me. So I'm at 45, the market's at 50. So I'll let that continue to work, and we'll just continue watching the chart patterns for a little bit longer. I did mention again, I saw somebody earlier. I don't remember who it was, but I saw somebody in the chat room say that they had pulled a Russell trade at a loss. Now we had 3 Russell trades going on simultaneously, right? One of the reasons that we use there we go. There's my fill. Let me get this out of the way. So there's a 55% capture on our third 0 DTE for the day. It's not too shabby, guys. Not too shabby. Okay, so let me get that in. I forget what I was talking about. I was talking about something. I don't remember. The Russell trade. So yeah, again, sometimes stuff will get lost. Let me see if I can close that up. Sometimes stuff will get lost in translation, or we just don't expound enough on a particular topic because we're texting, right? We're writing it down here in a chat room. Whereas if we were face to face and just verbalizing everything, it might be a little easier, I think, sometimes. But I did see somebody pull one of the Russell trades, and they said that they did it at a loss. And my initial thought was, why, right? Now, that doesn't mean that it was a bad choice, right? Maybe the Russell from here shoots up 1,000,000 points, right? And you're like, I was vindicated on taking a small loss because you guys took a big loss. So I'm not saying that it was the wrong decision, but I always wonder when I see those things, and because I question, because I say, okay, so I just delineated a lot of the things that I'm looking at with this sort of resistance level overhang here and some selling pressure coming in and whatnot. I feel okay with it. And then you see somebody bail on the trade, and it's always helpful to me, and I think it's helpful to the group as a whole if when you do that, when you kind of depart from what we're doing as a group, if you can take the time. I know that sometimes it's laborious to do it, but if you can take the time to type out, what your thoughts were versus what we're kind of doing as a group, it can be a good learning experience for me. It can be a good learning experience for all of us. When we're going this way and you're going this way, it's always good to maybe chat about, the differences in what we're looking at. But anyway, we come back to the charts here, and, again, we're still early. we're still early in the process here. We're about halfway through the day right now. Just as we speak, we're about halfway through the day. But starting to get some good price action, I think that could help our Russell trade. So I'm going to leave it here for now. We can just kind of watch the chart action. All right, I'm trying to work on another 0 DTE here today on the NDX. I'm not quite getting a feel there. It's on the put side, and it's the 15,275s by the 15,260s. Just the put side here. And again, not quite getting a feel here, but I think I'm fairly close. About $400 in on about $7,000 of capital committed. But I'm just, the pricing is bouncing all over the place here. So I'm just not quite getting a feel like I would hope or like. I'm going to probably go much lower than this. This would be about a 5% ROI, something like that on this leg. Go down to about 68. And this is getting close here now to where I don't want to go too much lower than this. There we go, 68 cents is my fill on that. And, let me get this up and recorded. I think this is will be our fourth. But I'm not counting the Russell yet because we haven't done anything with the Russell yet, right? That would be our fifth 0 DT for the day. Keeping you guys busy. Okay. All right, that is up and running. That is up and running. And let's see. We do have that. Yeah, that's fine. I'll leave the closed tab open. That's fine. Okay, I'll let that run for a little bit. Let me refresh my cap requirements on that. That was about a $7,500 trade, bringing in about 350, roughly about a 5% potential if we got a full capture on that. Obviously, it remains to be seen if that's going to happen or not, but we're in and running on it now. 15,350 is where we're at right now. On let me remove the closed tab. It's too much stuff to look at. 15,350 is where we're at right now, and 15,275. So it'd be another 25 points there, 50 points there, about 75, 76 points down from where we're at. I think that that we've got a pretty good probability on that trade, but obviously just brand new in the trade. So we got to let it work for just a little bit here. And so I'm going to come back here to the chart because we can kind of see the price action on the Russell. We can see here on the NASDAQ if we're bottoming out or not, which I feel like we're getting to that point. So we'll just let those play out for just a little bit longer. Okay, working on a call leg right now on our current version of our NDX trade. 15,430s by 15,450s. Little bit different spread than what we had. This is a $10 spread here, or excuse me, this is a $20 spread here. And we had a $15 spread on the put side. So a little bit fewer contracts, 4 contracts versus 5 contracts is what I'm looking at here. Okay. Haven't gotten a fill yet. Let's see what we can do fill wise here. I was thinking that would go. Let's try 70. May not get, there we go. All right, not the best fill, not the best fill in the world, but it's okay. Honestly, we really haven't got the best fills all day long, but our directional bias has been pretty on point, save for our Russell trade, of course. Okay. There we go. And now, if we take a look at it, the numbers are once again, you know, here we are almost with just, you know, almost 2 hours left in the day, right? And still getting great premiums on the NDX. The NDX has been very, very kind to us all day long. It really has delivered for us premium wise. And then, you know, it's just up to us. It's our job to execute on it, obviously. But I got about 75. Well, let me refresh my cap requirements here just to make sure. I think that that's correct. But well, yeah, let's take a look at the actual number. NDX 7,300 bucks, 7,400 bucks. But we'll go ahead and call it 8 grand into the trade. Brought in about 600 in premium. If we could get another 50% capture rate on that, if we could get another $300 on that, that would be great. It's already kind of toying right here. You can see it's bouncing in and out, but it's already toying with the profit area there. So we'll give it a little bit of time to work and see if it can work into our favor here. Obviously, continuing to watch the Russell trade. I'm going to come back to the chart view because, you know, that's just the easiest place to kind of look at it. You know, we pretty much, if we look at our NDX trade right now, for all intents and purposes here, we're pretty flat. If we look at it in the curve, you can see that we're just about as delta neutral as we can get in that trade. You know, it moved, the darn thing moves around so much, it's pretty tough to get better than that from a delta neutrality point of view. So we're pretty well positioned there. We just need a little bit of time to click by to try to get some of that theta moving for us. And of course, you know, we are down to just the last couple of hours of trading in the day. So that should work for us. That should help us a little bit in the trade, but that's pretty neutral. And then of course, our Russell trade, we could use a little bit of down movement, right? So we just can kind of watch the indices here. Again, these are the futures contracts, but it gives you an idea of, I like using the futures again, because it gives you continuity between the pre-market and the aftermarket hours. But you can see we just kind of want this to just kind of hang out, right? We just want the NASDAQ to hang out. We would love for the Russell to continue to gain some weakness to the downside here. So let's just let that play out for a little bit and see where we go. Okay, top of the hour update here. Holy moly, it has been a busy day, busy day. You see the price action in the indices. I think that we timed this latest iteration. What is it? The third 0 DTE and NDX today. I think that we timed this current iteration fairly well in terms of trying to maybe define that bottom. You see that big wick on that candle there. And that was sort of our cue, our catalyst, if you will, to try to shoot for that put leg, and now we got a call leg in there. And then you see the Russell there, and it's trying to help us with that directional help. Theta, of course, helps as well, but we really need directional help there on the Russell trade. So hopefully that can continue to work for us rather than against us. But I did want to take a look quickly here at our current iteration of our NDX trade. Again, it's pretty well positioned here. A little bit closer to the calls than the puts on that. We've got a little bit of a, whoops, where'd we go there? Right there, a little bit of a negative delta. Trying to pop into the green here. So give it a little bit more time to work and kind of see how that goes. And I'm just looking at my son's trade. I still can't get it up here, but I'll post it again over here. His Russell trade. 22 let's see, 22.90, right? 22.90. So 1.5. We're a 1.5 below that right now. Could use a little directional help on that one. We've done some work on the coin trade. I think everything else. You see the fluctuations there in the nat gas. I think that we were, down 10 cents at one point on the nat gas contracts, and then up 10 cents on the nat gas contracts. And you think 10 cents, what, not a big deal. That's a really big deal on nat gas. And to further that point, we have had 40 and 50 cent daily moves in nat gas as well. So, I mentioned this as we get started on the day today, that there's going to be some volatility. There's going to be some gamma explosion going on in this 40 for 40 nat gas trade as we get closer and closer to expiration here. But the real key, again, not that much difference on the nat gas trade versus my short ES trade, in that this right here is important. Obviously, we would rather this be green than red, of course, but really the income off of that trade is what's going to drive that trade. And it's kind of the same thing here in the nat gas trade. Is it can bounce around and do it at once, but if I can capture a good portion of that $17,000 of extrinsic value in the next week, right? 6 days, that would be sufficient. That would be sufficient. I wouldn't need any directional help in the trade, and then we can reset and see where we go from there. But again, just kind of watching the price action here, and I think that we're okay on we're going to watch the NASDAQ here just for a little bit. And, again, we want to manage the trade, because I don't think at this point in the day, it's going to be very effective for us to try to adjust this trade. So if we keep pushing here, we may want to just pull the call leg here in just a moment. We'll watch that for a little bit. And then again, hopefully we can get some help directionally there on the Russell trade. So we'll just continue to watch it here for a little bit. Again, if you guys have questions, of course, let me know. Otherwise, we'll be checking back in at the bottom of the hour. That darn mute button. It's a sticky button. Thank you for letting me know. I was just giving a bottom of the hour update here. Obviously, we've just got an hour and a half to go in the trading day. Stuff's moving along pretty quickly here as the day progresses. We've obviously had a ton of activity today, to say the least. We have had a ton of activity. I think that obviously we are as well positioned in all of our other stuff as we can be. I might look in the next day or so to maybe tune up just a couple of them a little bit more, maybe the CL trades and things like that. But I think that for the rest of today's action, everything that we've got going is pretty well situated. And so our focus now really turns just to our RUT trade, our Russell trade. That is the 0DTE, not the one here in this account that we still have 2 days to go on, but the 0DTE that is in my son's account. Of course, as you know, 2290 is the short call. We just have calls in that trade. 2290 is the short leg. And that's basically where we're at in the market right now, is 2290. So we've been sitting here, you know, give or take just 1 or 2 points, really. Just a variation. Maybe we've been up as little as 12. We've been up as much as 16. So just a couple of point movement here on the day. But the trade action has been fairly favorable for us the last hour and 15 minutes or so. So we'll continue to let that play out. I will say a couple of things. Okay, we go on the record as saying a couple things on the 0DTE Russell trade. Number one, that probably not an opportunity for us today to get in a put leg. There's no premium in the put side no premium that makes any sense. Okay, so we don't really have the opportunity to hedge this trade from a put side. And that limits us a little bit, which of course is a negative. However, I will say that on the rare occasions that we have rolled a 0DTE, every time that we've only done it a couple of times in the last year. We've only rolled 0DTEs a couple of times because, again, the risk reward ratio just generally doesn't make sense. But every time that we have, A, they have worked, they have made us money, and B, they were all in the Russell. I don't know what the correlation, or if there is a causation there or what, but that's been the case. And I'm looking at a couple of opportunities here on our 0DTE call legs. And I'm going to throw that out there. You're going to be all like going crazy, but it does look rollable. The risk reward ratios, the premiums, all of that good stuff on it, it does look rollable. Now that is, you know for a fact that's going to change, right? In the next hour and a half, that will change. It might get better. It might actually become more rollable, or it might get worse. We know it's probably going to change in this next hour. But at least right now, as we sit, it looks like it could be rollable. There could be an opportunity there. So, you know, generally at this point, we would look to start adding put legs to hedge the call leg. There's no premium in the put legs right now that at least that would make sense. But we're still right there. The price action looks okay on the Russell, and so we'll continue to let it play out for right now. And then we'll, you know, if we feel like we need to do a roll, we'll do that. Obviously, if we could get it into any semblance of a profit, you know, no matter, I don't think it would even matter what the capture rate is. If we could get it into the green to where it was a profitable trade, we would book that profit. So that's just kind of where we're at in the Russell trade right now. Okay. As far as our whatever iteration, is this the third, right? The third 0DTE that we have done today on the NDX. It's trying its best here to get into the profit zone. Again, looking for roughly a 50% capture rate or so. And, you know, it's moving in the right direction. That would be somewhere around a $300 profit on that trade, and showing about $70, as you can see their profit right now. So we'll continue to allow that to just work for a little bit. And really that's where we're at on these two trades. These are the two trades that are our focus: our NDX trade, 0DTE, our Russell trade, 0DTE. We'll give them a little bit more time to work. And, you know, again, unless prices go haywire on our Russell trade, on the RUT 0 DTE. It gives us a little bit more latitude. It gives us a little bit more time to make a decision if there is an opportunity to roll it. If there's not an opportunity, then we're a little bit more up against a wall and we would have to, figure something else out. So there's a little bit of luxury there in terms of time, but we'll just see. And again, I'm wanting to watch the price action that we're getting here. Like I've said earlier today, I think I've actually mentioned this a couple of times. Everything that we're looking at, technically speaking, is bullish. Price action is bullish. Every index that we are tracking is bullish. They have been for a week and a half now, pretty much every day, right? Like the NASDAQ's been up 100 points a day every day, it seems like. But even if we are in a confirmed and sustained bull rally, you still have, fits and starts. You have pauses in that. And to go, let's look. I don't know. I don't know if it makes too much difference if it's the SPX or we can look at both of them. I was going to look at the SPX or the NASDAQ. We're talking 1, 2, 3, 4, 5, 6 days on the SPX, and 1, 2, 3, 4, 5. Today is number 6 on the NDX, but it's starting to give back a little bit. But this is, even in a bull market, right? This is typically what you're going to see. Even in this very, very confirmed bear market trend, you see these fits and starts, where you have the up days, right? It's never really in a straight line. And to have 5 or 6 days, in a row, where you're trending just in one direction, whether it's up or down, doesn't really matter. That particular trend, that section of that trend, gets a little long in the tooth. Generally speaking, we did go through a very, very, very long sustained period of time. I've said this before in our AST trading system. I'm very, very proud. I'm very proud of the results that we have got in our AST program, not just because we have been able to consistently beat the market there by taking a lot less risk, but because from January of this year, when we started that program, until whenever, 2 months ago, I guess all the market has done is just every day it was like up, 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 and we kept waiting for those breaks in the trend, and it just didn't happen. But that was a little bit of an anomaly. Generally speaking, you get 5 to 7 days of a consistent move, again, whether it's up or down, and you tend to start getting some of that back. So we'll see how this goes. I want to look just for a second at the NDX trade. Let's just take a quick look where we're at in the trade. We are getting down on time now. We're getting a little bit down on time, and we're obviously closer on the call leg than the put leg. So we've got a nice overall. I'm going to open my close tab, and there's our NDX trade. So we're up about $1,100, or well, I'm up. Everybody obviously has position sized and has put different amounts of capital into this trade, but I'm up about $1,100 or $1,200 on the day. Would certainly hate to destroy that, right, with this current iteration of our 0 DTE that we have going on. So again, it's not quite the same situation as the Russell, meaning in our 0 DTE Russell trade, if I could just get that into any profit zone today, I would be happy booking that profit, right? Just getting out of that trade at an overall profitable result. not quite there with this NDX trade. I would still like to shoot for about a 50% capture on this, which again would be about a $300 profit. So we'll just kind of see how the price action goes. I'll go back over here once again so that we can just kind of view the charts and see where things are going. If I look at our NDX trade, let's just take a look at it for a second. Get rid of that close tab once again, get rid of all that mess. Obviously, we are pushing closer to the call leg than the put leg, but the call leg is at 15,430. We're at 15,385. So, you know, 45 points, right? It would be more than you know, 2 times what we're down right now is what we would need to go up to get into that and start breaching that level. We do still have premium on both sides of the trade. I mean, I don't know what else to say, guys. Just a really, 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 really good day for premium on the NDX today. We've been struggling a little bit, not with the NDX per se, but with the Qs, which are obviously, you know, just a version of the NDX. We've been struggling for the last 2 weeks on our Q trades with not necessarily getting the right deltas or even getting the directional movement right on those, but getting the premium. It's just been a little tougher on the Qs, and so it was very, very refreshing today to look. You know, I do all my pre-market work before we get together here. That half hour between when we go live in the Zoom and the market has already opened up. I'm doing my research and looking at different opportunities for us during the day, and I was just very, very pleasantly surprised. Let's put it that way. Very pleasantly surprised with the premiums that were available in the NDX, and they really haven't dissipated all day long. I don't think we've ever done 5 0 DTEs in one day. I'm pretty sure that's a record. It will remain to be seen, of course, how they all turn out. We're 3 for 5 so far, right? We've closed 2 of the NDX trades out, the SPX trade out, and we've got this iteration of the NDX trade still working for us. And then, of course, obviously, we have the Russell trade working still as well. So we'll see if we can hit it 5 for 5. That would be quite the hat trick. Although the hat trick is 3, right? But we'll see. We'll see. Oh, yeah. Paul, you got a 50% fill on your NDX. You can, you know, first of all, awesome. That's fantastic, right? But you know, one of the things that you start to learn a little bit as time goes by is which trades you can afford to work a little and which trades you can't, right? So like the SPY trades, for example, it's not always that beneficial to try to work a SPY trade. You know, we're talking in a lot of instances on our SPY trades about fills of 12 cents, 13 cents, right? So to try to work that trade for an extra penny and it drops 3 pennies, like you know, the risk reward ratio, the math didn't make sense to do what you did, right? You should have just taken the penny less. The NDX is a little bit of an exception to that rule where if you work the trade, if you see my fills, if you can kind of get a feel for the directional bias there, you can get way better fills in the NDX than I get. So, sort of similar in the Russell too. And I do like seeing that in spite of how sometimes it makes me feel. I do like seeing that in the trading room, seeing all of you guys post your fills that are much better than mine. because it means that you're a little bit more disciplined in accepting certain prices and things like that. So that's awesome, Paul. That's awesome that you got out of that point. I'm obviously still working a little bit. I'm showing that I'm up about $100 right now on the $600. So I'm getting there. I'm getting there. I think that let's look back at the price action for just a second. That's not bad. It's not bad. The price action is okay. So, the good and the bad, right? The good and the bad of having just these ridiculous premiums today in the NDX is that they don't go its way as fast, right? So we've been very, 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 very fortunate to be able to book these profits as quickly as we have today. But it can take a little while. They can be a little sticky, right? But we're getting there. We're getting there to the end of the day, and I think that it will, hopefully get us to the capture rate that we desire. I don't know on the NDX trade. If you look at the price action for the last, I'm going back here to almost an hour ago. We haven't gone anywhere. We have not gone anywhere in the last hour on the NASDAQ. And so, I would hate to say that we have the potential on this particular iteration of our 0DTE with the NDX to take it to expiration. But you never know. You never know. Enza, I call you Enza. That's the easiest way. Enza says you're trading like an algo. We've hit it pretty well today, right? If we could pull out a win on the Russell, it would be quite the day. It would definitely be quite the day. But we'll see. We'll watch that go. I guess now we've gone through our positions. We've adjusted as much as we need to today. We know what we need to focus on. We're focusing on the Russell. We're focusing on the NDX. So we kind of are locked in on, what we need to get a grip on. So I'm going to take a little second here, and I do want to talk about for just a moment the other thing that I had mentioned this morning, and I said we'd get to it when we had time, and I think we have time now. As we're getting closer to the end of the day. We talk about position sizing, right? And I think that it gets, everybody's eyes start to roll into the back of their head, and like, oh boy, here we go again, another position sizing exercise or conversation. But there are multiple ways to calculate position size. In other words, position sizing is just kind of figuring out, how much money you should have in any one individual trade. And there's several different mathematical models. And none of them are necessarily right or wrong. It just kind of is about how you want to approach your trading. But there's a couple of comments that that I shared with an individual in Zoom yesterday. And I thought it was maybe prudent to share it with all of you here today as well. And hopefully that can help you a little bit. I think if we expand the conversation beyond the phrase position sizing and maybe talk about let's call it portfolio optimization. Okay, portfolio optimization, optimizing how we have our money at work. Okay, so part of that is the word diversification. And we've talked about this as well, that diversification can mean many things as well, right? Diversification is not just spreading your money around a bunch of trades, although that's part of it, right? So step one is having a bunch of trades. We've got a bunch of trades going on in here. And I've gotten multiple comments from those of you members that were original founding members of this program way back over, almost a year ago, over a year ago now. And you have said that you've all made comments in terms of how much smoother your net lick numbers are changing, right? We're not getting these drastic moves of huge gains, huge losses. It's become much more consistent. Okay. Part of that is, I believe, due to us adding a whole plethora of trades, different numbers of trades, right? We don't have one. We started with one trade, one trade every Monday, every Wednesday, every Friday, one trade, 0 DT, right? And now we're all over the map. So that helps. Just the idea of spreading your money around can help. And the way that it helps for me is it number one, it allows me to use more of my buying power. So you guys will see this on Tuesdays and Thursdays when we're just throwing, yesterday it was maybe 15 trades. I don't know. I have no idea how many trades we ended up doing yesterday, but it could be, it's not uncommon. You guys know this, that it's not uncommon on a Tuesday or Thursday bonus session to do a half a dozen to 10 maybe trades, right? So we throw all these trades on and you will see me say, hey, I'm done for the day. I don't have any more buying power. And when I say I don't have any more buying power, I mean, I don't have any more buying power, right? Like maybe in $100,000 account, I've used up 97,000 or something like that. So, on the surface, it kind of seems like that is going against, our position sizing and what we have talked about before. But one of the things that I always do when I look at those trades is I say, okay, well, what other things do I have going on and where am I in the profit and loss? So for example, today, I slightly over position sized in our very first NDX 0 DTE today. Okay. Generally, I like to put in 1/3 of my available capital up front so that I have the ability to do that 2 more times. And I slightly over position sized on that. I was closer to 50% of my buying power, but I felt comfortable doing that because I had one of our Russell trades that I think I had 13,000 in that was nicely profitable. And I'm like, I can book the profit on that at any time here, get my 13,000. So I look at that 13,000 as cash, right? So if you don't have multiple trades going on all the time, you're going to just from a prudence standpoint need to hold more cash. So just from a diversification standpoint, spreading your money around, having a bunch of trades going on, the Tasty Works mantra, trade small, trade often, it's a good, important part of it as well, right? But the part that gets a little challenging, and I'll have to dig around. I've got a laptop somewhere that I don't use anymore, and I know that file is somewhere on that laptop, but I'll have to try to find it. I had an Excel spreadsheet that would do this for me, but the real power, the real art of position sizing comes in not just knowing how much money you would feel comfortable putting into a trade, but how much money you should allocate to certain trades. Okay, so this is a big, elongated, long-winded explanation of the definition that I'm going to give you right now. There's lots of definitions. There are multiple different definitions to position sizing. This is the one that I find the most value in. Okay. Position sizing is the process of allocating your capital in such a manner that if all your trades work out as planned, the dollar profit on each trade is the same. Okay. Let me say it again. Position sizing is the process of allocating your capital in such a manner that if all of your trades worked out as planned, the dollar profit on each trade is the same. So what does that mean in plain English? Well, let's use a very rudimentary, very simplistic example. Let's say that we only are going to do 2 trades in our account, right? We just got 2 trades. And, each trade has its own individual dynamics, right? Each trade has a probability of success. We call it POP, but each trade has its own unique probability that it's going to work out. And each trade has its own unique ROI potential. How much could it potentially make? And you guys know that there's sort of an inverse correlation between those 2 numbers, right? The higher the probability of success in the trade, the lower the ROI potential, generally speaking, right? So let's say that we have some money that we want to throw into 2 trades. We look at these 2 trades. One trade has the potential to make me a 10% rate of return, but it's got a fairly low probability of success. Another trade has the potential to make me a 5% rate of return, but it has a much higher probability of success, right? So one has the chance to make me 10% at a lower POP. One has a chance to make me 5% at a higher POP. If the definition of position sizing is to allocate our capital in such a manner that if all of our trades worked out as planned, the dollar profit on each trade would be the same, that would mean that we would need to put twice as much money into the 5% rate of return potential trade as we would into the 10%, right? So you've got all of these varying trades. They've all got different ROI potentials. But if every one of them worked out, the dollar profit on all of them should be the same. Now that's really hard to do. We talk about we talk about delta neutrality and trying to keep our trades delta neutral, and how it's kind of almost an impossibility, but we can try our best. This is an impossibility too, but that's the goal. That's here we go. Here, last hour of the day. Well, let's see what happens with these indices. I'm going to bounce back over here while I'm chatting, just so we can see the price action. But anyway, the reason that I wanted to bring this up, and hopefully this will strike a chord with you. It wasn't. You guys know I lose track of our trading days. I can't remember if it was Monday of this week. It seems like maybe it was. That was our last 0 DTE day, right? It must have been Monday, where I went down. So it wouldn't have been Monday. Monday was when I went down like $3,000, $4,000 right off the bat, and then I was able to adjust and get back to just a very, very slight profit, right? So that was Monday. So it must have been a previous day last week where we had a 0 DTE that we called it a good loss, right? We called it a good loss. It was a loss. It didn't work. It was a losing trade. But I called it a good loss, and it was a good loss for me for 2 reasons. Number one was it wasn't a full loss. It was 30% of our capital rather than 100% of our capital, so it was good from that standpoint. But my net lick in my account went up that day, right? So probably the most important trade of the day, and let's be very clear that with the risk reward ratio that we take on in 0 DTEs, our 0 DTE trade, we got a million trades, right? Maybe not a million, but we've got a lot of trades going on in here today. Look, let's be very clear. The most important ones are the 0 DTE, right? That's where our main focus is on that 0 DTE. So in spite of the fact that trade didn't work for me that day, it actually resulted in a loss. my overall account value was up that day. My net lick improved for the day, right? So it's always easier in hindsight, right? It's always easier in hindsight to know if you've done something correctly. And for me, using that very strict definition of position sizing, I know that I've done that correctly when a day like that happens. I've had other days, I'm not perfect. I've had those other days where it's the opposite of that, right? You look at your trades for the day and you're like, man, I had 6 winners on the day and lost money on the 0 DTE. 6 winners, 1 loser, and I'm down overall on the day. The 6 winners didn't offset the 1 loser, right? So all of this ultimately is just coming back to that definition that I gave you of position sizing. So you'll see today is not a good example. Today isn't really a great example because we've closed most of those out. But you'll see differences, right? Like we do have a Russell trade that is going on right now inside of our main account that is expiring in 2 days. It expires on Friday. And that trade, I've got $10,000 in that trade, right? And now we go down to this X trade and I've got $400 in there. So we've talked a little bit in the past about maybe as I post a trade, to sort of rate it or put, what my conviction level with that trade is. Yeah, scoreboard, Tony, checkbook, scoreboard. I mean, that's ultimately the end of the day, right? Like I've had conversations with a couple of you here in DMs where we are on different sides of the fence, right? Somebody is long, I'm short, I'm long, they're short. They like this versus this, and we'll kind of do these little side things. We're like, all right, dude, you go with your iteration and I'll go with mine, and let's check in 2 days, And I've had many occasions where I'm like, you know what? In hindsight, I still feel way better about my choice, but you made more money than I did. So ultimately, at the end of the day, it's checkbook, right? It's scoreboard. But anyway, I don't know that works. I put every trade on, right? I put every trade on thinking that it's a good trade. There's I'm not going to put on a trade where I'm like, oh, this is just a marginal trade, right? So I have a good conviction with every trade that I put on, but the probabilities of trades working out are always different, right? And so I think that you guys can intimate those numbers. Just you guys know in here in this main account that I'm working on roughly $100,000 account. And you can see what my capital requirements are, what my position sizing is in these trades. And you can sort of intimate from that, where my conviction is in any one individual trade. But, if you're, so again, I would just say this, if you are having a lot of those experiences where maybe, we get to the end of the day and you're like, geez, I booked 5 winners today and 1 loser, and the 1 loser wiped out the gains from my 5 winners. If we don't want to call it position sizing, that's okay. We can call it portfolio optimization if you'd like, or what have you. But that's, I think, where, again, there's so many levels, right? There's so many levels to trading proficiency. And that was always something that was frustrating for me forever was, trading alongside a mentor or another trader and, kind of doing what we're doing here, right? Which is, we're all in a little bit different trades from time to time, but we're trying to follow sort of the same trades with the same fills, with the same strikes, etc. And yet, everybody ends up with varying degrees of success. What's the difference? Well, it's how you allocated your capital to those trades, right? Maybe you put $5,000 in the losing trade and 1,000 in the winning, and somebody else put $5,000 in the winning trade and 1,000 in the losing trade, right? So that allocation within an allocation, position sizing isn't necessarily about saying, I have $10,000. I want to spread it out amongst 10 trades. So I'm going to put 1,000 exactly in all 10 trades, right? That's not really the true definition of position sizing. So hopefully that helps a little bit. Petrosoft, yes, I need to get better at this. Past 2 weeks, I think I've been poorly position sized, and one trade is keeping me in the red. It seems, yeah, understand that, which is not good. Like you said, as before, it was green most of the days, regardless of the trade state. Yeah, I will tell you, of all of the things that we focus on as traders, that's one of the harder things, right? Because there is a little bit of subjectivity that goes into that, right? Of saying, I've got 2 trades and I'm going to put, twice as much in this trade and half as much in this trade. But I will tell you that, again, this will change. It always does. It will change as time goes by and the market dynamics change and IV and all that kind of stuff changes. But these 1 and 2 day trades right now have been really, really good in terms of high confidence trades. So anyway, I just wanted to share that with you. I'm going to take a look quickly here at the NDX. We are down to just 50 minutes in the day. Let's take a look at our charts once again. That darn Russell is just kind of sitting there, right? So, it's not pushing up. It's not dropping either, right? We would like it to drop, obviously, but maybe more important than it not dropping is it not rising, right? Because again, I know everybody's like, oh, but the rolls that we have had on the 0DT that have made sense, they've all been in the Russell for whatever reason. I don't know if there's a correlation to that or not, but they've all been in the Russell. And knock on wood, we haven't done very many of them. We've only done a couple, but the ones that we have done have worked out quite nicely. And I haven't, I've been talking here now for a half hour or whatever, so I haven't looked at it here in the last half hour. But I'll, as we go to break here, I'll check the numbers again. But it looked fairly rollable the last time that I looked at it. So again, not a ton of consternation on the 0DTE Russell trade. Okay, Russ, you have. I'm not a superstitious person, but you've done a good job with those candles. Those candles seem to work, so just keep pounding them, buddy. Keep pounding them. I did want to take a look at our NDX trade quickly. So just keep this in mind as we are looking at the NDX trade. Okay, so we've got a, if you followed my strikes, we've got a 20-point spread on the call legs here, and we've got a 15-point spread on the put leg here. Okay, so that allowed us to have a little bit more contracts on the put side than the call side, but that will give you a weird number. Just so you're aware, that will give you a weird number if you're trying to close this whole trade together. So if I highlighted this and I just went to close it, and I wanted to close full, so I wanted to close all of those legs, you're going to see a weird number down here. Okay, you can be like, oh my gosh, that's really, really high. That's because of the differential on the number of contracts on each side. So It may, and it's the NDX anyway, right? So it's always a little bit of a challenge. So it may be easier to close one leg out versus another. Now we're a little closer to the call leg than the put leg, but it's getting to that capture point where I'm going to say that I want to start pulling the trigger here. So I'm going to watch this for what do we got? Just a tad more, just a little bit more than 45 minutes to go in the day. I'm going to maybe give it 2 more candles. So 10 more minutes in the trading day here. It'd take me, you know, somewhere around 25 after the hour. And just watch the NDX here and see if I can get a little bit better. There we go. You know, it doesn't take obviously with 45 minutes to go in the day, fade is really starting to work now. So I'm well above my 50% capture rate on this. I'm going to let it play out for just another 10 minutes or so. And then we'll come back and visit that, see if it's something that I feel comfortable leaving for a little bit longer, maybe to expiration, maybe, I don't know. But we'll see. But we're at 50% capture now, right? So those of you that are better traders than I am, those of you that are more disciplined than I am, here's another opportunity to book a nice profit on the trade. I'm going to let it play out for a couple more candles, and then we'll be back shortly. Okay, I told you guys I was going to wait 10 minutes or 2 5-minute candles, but you guys know I can't stay off Zoom. I can't. I always say when days are flowing, and by flowing, I mean that we don't have to do a lot of adjustments, that I should be able to get a lot done in the day, even though we're in Zoom, because we only really need to check in at the top and bottom of each hour, and that kind of keeps us, you know, posted with what's happening. But I still find something to pontificate on, it seems like, throughout the rest of the day. So anyway, I was just saying, you know, it obviously, it doesn't take much, right? As you get later in the day here, it doesn't take a whole bunch of movement to really help out a trade. Now, it's interesting. We got a nice little movement there on the NDX. The Russell too is trying, but we got a nice little move there on the NDX, and it flashed $500 profit for me there just momentarily, and then it gave it right back. So it's being sticky here at this level, but I will say, you know, that if we can get a little bit more softness here, I'm going to probably continue to hold the NDX. I don't know that we hold it all the way through expiration. My trigger on the NDX is this candle right here. Okay, this green candle right here. That was this run that we had right here, this retracement from the drop. If we break above that candle right there, whatever the profit is, I'm going to take on the call side. Hot Mike, thank you for letting me know. Let me see if I can mute that. Okay. Thank you. So that's kind of what I'm watching. But the price action is obviously favored. There we go. There's $500 back on the scoreboard there, for a moment at least. 490 now. But we're getting to a pretty good capture rate here, right? It's looking pretty good. And then here we go. Again, I'm having a hard time getting it to illustrate here. Let me see if I can get this thing to work. I don't know what's going on. This may be a problem that I have had forever, and I just haven't noticed it because I rarely have any account that just has one position in it. And I think that's what's happening here in my son's account is he only has this call spread on the Russell. And I don't know, I put in a working order here that's a crazy working order. It's never going to, it's at 10 cents now. I put it in at 59 cents. So it won't hit. But by Ben, I think you helped me with that. By putting that in, it allowed me to show it. But the point is, our 0 DTE ret trade is in the profit zone. It's in the profit zone. We are up. It's a massive $44, but we are up. So if you don't want to take any more risk in the 0 DTE Russell trade, you can get out. You can get out right now. Okay, 143 now. So anyway, just wanted to show that with you. Ron, what would you watch for if you were short with the 15-320 put? 320? Is it, Ron, is it today's expiration? Let me know if it's today's expiration. NDX 0 DTE. So you went, we're at 15,275 and you're at 15,320. I mean, you got 35 minutes to go, right? And that's 65 points. Oh, that's right, Ron. You did a really good job today throwing on all the trades, but you didn't get them all close. The question, I guess, Ron, on that leg right now would be, is it profitable? Is it profitable? If it's profitable, I think it's kind of a no-brainer to take it off. If it's not, then it's a little bit more questionable. $450, my friend, I'd take it. I would take it. Okay. Still watching the price action. Let's come back to here for a moment and watch it. I think I'm going to go to the other computer over here and see if I can put in just a close order on the Russell trade for anything that is in the profit zone. Anything in the profit zone, I think I'm going to be okay with. And then if that doesn't exercise before the close, again, I do think that we've got a good opportunity to potentially roll this Russell trade. So we'll just see how that pans out here. Looking at my NDX trade, that's almost fully profitable now. It's almost fully profitable. So let's just watch some price action for a little bit. We'll come back at it in just a moment. I'm going to start hitting the mute button first, then the video button second, because it is a sticky button. I don't know why it doesn't work very well, but I bottom of the hour here now, just a half hour to go, getting some good price action in the NDX, could get better price action in the Russell trade. But I wanted to show you a couple of things here. The NDX trade, we're getting very close here to max profits. Now, that being said, so you say, okay, well, I've got $565 profit here. I'm going to just leave $55 on the table if I close that out. But of course, that that's not the case, that we're going to have fees, commissions, spreads, whatnot to close that out. Now, I don't know that we could get 55-cent debit. Let's say that maybe it's 65 cents. Maybe that's aggressive. I don't know. But now you're up to $70 or so in fees and commissions. So again, I feel like maybe we're okay here at this level with, just 25, 26 minutes or so to go in the day, to maybe let that run just a little bit more. So I'm going to let the NASDAQ continue to sit there. Now, I wanted to show you something on the 0 DTE Russell trade. And, we don't usually look at these as a group, rolling them and the numbers that go along with that. We don't usually look at them. And I'll tell you that we don't look at them, generally speaking, as a group because they're ugly. The numbers on them are ugly, ugly, ugly. But if you take a look at our Russell here, let me grab that. And see, again, for some reason, I have to have this working order in here for this to even show up. So I don't know what's going on. But let's say that we wanted to roll this. Okay, we could roll it out 2 days. That would be a Friday expiration. And let's see, you could do it at a $3 credit or somewhere, in that ballpark, right? Let's see how high you could roll without going into a debit, right? So there's 5 points, still a credit. There's another 5 points. There's a credit still. Another 5 points. Credit. Let's try one more. Credit. Slight credit. Reality is that would probably be a slight debit, right? But the point is that you rarely get this. You rarely get this on a 0 DTE. We rarely get the ability to roll out and up and at a credit without adding any additional buying power. I was going to say, I don't remember the last time that I've seen one that we could do that with, but I do remember. And it was the Russell again that we were able to do that roll. I remember it distinctly. It was on a Friday. We rolled it on a Friday and to the following Monday, and we were able to exit it there at a profit. The other thing is, what does that roll from wherever we're at right now, 2290 to 2310, puts us right again at the tip of that extended expected trading range. So, all of the numbers line up on this. All of the numbers make sense on this trade from a premium standpoint, from a delta standpoint, from an expected move standpoint, from a risk reward standpoint. They all make sense really to be able to roll that. So we'll see. Of course, the ideal situation would be not to have to roll it at all, right? But we'll continue to watch it. So I'm going to watch the price action here for just a little bit more. Let's give it, let's say another 10 minutes here. That would be with 14 minutes to go in the day. And just we'll kind of assess where we're at there on the Russell. Obviously the NDX too, but we'll assess where we're at there on the Russell and what we want to do. Oh, well, and the other thing too, the other component to that is that we have not been able to get a put leg in on the Russell trade today. And obviously if we rolled it to Monday, we would be able to most likely get a put leg in. And of course that would enhance the premium quite a bit as well. So yeah, we probably should go through that exercise more often of looking at the numbers on a 0 DTE for a roll, and you can see, generally speaking, how horrible they look. But usually it's a frantic last half hour of the day, and that's the last thing that we have time to do. So anyway, watching the price action here again for just a little bit, and we'll be back. Okay, a couple quick things. Nathana, you closed the Russell, had a small profit, got that nice little candle right there. And we're back. We had a very, very teeny tiny window there in the Russell. I would suggest if you're looking to close this, that you get your order in, right? You just get the order placed. So there's that stupid working order that I got to have this one show up. But, you know, I filled it at 79 cents, right? So, well, I mean, whatever you want to put in, 75 cents, 70 cents. There you go, Nathana. So 70 cents, put your order in rather than like waiting for it, you know, just put the order in because again, you know, it's bouncing all over the place here, P&L wise, but that's two opportunities now in the last 30 minutes or so. We've had two opportunities to exit that at a slight profit, but you've got to have the order in working, I think, for it to hit. It's going to move around too fast. But anyway, still watching that. And then our NDX trade is basically zeroed out. There is no extrinsic value left in that. But to close it, again, I don't even know where it would be, probably closer to 20 cents, and it's not a credit, it's a debit. So, you know, you're still looking at 25 to, I'll bet you $45 to close the trade. And, you know, here we are with just about 15 minutes or so to go in the day. And it looks pretty good right now. So I do think that unless something substantively changes here, we're okay on leaving the NDX trade to go to expiration. So again, on the Russell trade, you know, if you're like, geez, if I could go 5 for 5 today on our zero DTEs and exit the NDX trade, which looks really solid, and exit the zero DTE Russell trade at a profit and go 5 for 5, whatever the profit on the Russell trade is, I'm good with it. I don't want to carry it over. I don't want to have to deal with that. If you're not interested at all in rolling it, we had two opportunities already to exit it at a slight profit. I think you'll get another one here. Well, there you go again. Right now it's flashing $77. So do like Nathana did, put in a you know, just a small profit level there, get the order in, get it working, and it should hopefully hit for you. It should hopefully hit for you. I'm going to continue to hold my version because I do think that there is a fair chance that based on price action, we could come in at a much better profit level than a small profit. Full profit, I don't know about that, but we'll see. And then B, I feel comfortable in rolling it. I think it is rollable here. My preference would be to be out of it too. Be out of it, be clean in the trade, start fresh again next Friday with another zero DTE. But, you know, the market doesn't always give me what I want. So we have to work with what we've got sometimes. So just keep an eye on that, and we'll check back in just a couple minutes. Okay. 9 minutes to go. 9 minutes to go. And here is your third opportunity to exit the zero DTE Russell at a profit. Third opportunity. Okay, so we all make our own decisions. Brian's booking a profit. We all make our own decisions. We're all big boys and girls here. One of the rules that we try to follow is own your own trade, right? And so make your call, make your decision here. We're in the profit zone for the third time now on the zero DTE Russell trade. We've got just a little over 8 minutes to go in the trade. So get your orders in if that's what you want to do. if you want to, I'm probably going to try to make a decision on whether I'm in a position to exit it, whether I think I can hold it to expiration, which I don't think that, unless we get a big drawdown here, this is not a hold to expiration trade, right? We're too close. So look at whether, I got a profit that I'm okay booking or whether I'm going to roll it. But that's probably, I don't know, 5 minutes to the close. So, really just 3 minutes from now, 3 or 4 minutes from now is when I'll be looking at that. Our NDX trade looks good. I mean, it's showing negative extrinsic value, which is, not right, but that's how the prices bounce around as we get to the close. So I'll check back in a few. Getting down to the wire here, and I think that I'm going to hopefully be in a position here on my Russell that I don't need to roll it. Hopefully. Price action looks okay. We've got about 3 minutes to go here. Solidly in the profits right now. I did that trade for 79 cents. We reversed it now. It's down about at 25 cents, 30 cents mid price. I'm watching the price action if it will pull up. Price action looks okay here. Again, now I'm down to 3 minutes. So my plan at this point is to not roll. My plan at this point would be to just book profits on it. I'm watching the price action here to see how close to the expiration that I can get. It's obviously nicely profitable right now. So this would be the fourth. This is the fourth iteration or the fourth opportunity that we've had today to book a profit on the 0DT Russell trade. So if it doesn't work, committed to pretty much not rolling here. So if it doesn't work, I should be the only person that loses money in this trading room today, right? Because we've had 4 opportunities to book profits on it, but it's looking pretty good here. With just now a minute 45 seconds, right, to go on that. $671, 594. It's going to bounce around obviously here, but I think that I'm going to try to run this to expiration. Obviously, the NDX, our NDX trade, that looks solid. That looks really, really solid. Kind of leave both of these up here so we can look at them both as we run it here into the close. Just a couple minutes to go on the day. 1 minute to go really now, right? See what my clock down here says. About 50 seconds or so. So it looks good so far. Let's see what we got. 30 seconds to go. You're gonna see that price bounce around like crazy like that. But look at your extrinsic value. Your extrinsic value is really what is showing you where we're at on the trade. Pushing up, it's pushing up now, but we should be at the close here momentarily. And I think there we go. There we go. So full profits on the Russell. Best day yet. I love seeing that, Lefty. That's awesome. There you go, guys. You cannot get better than that. You cannot get better than that. You really can't. 5 0 DTEs. So let's look at it. Now, again, you guys know this. You've been through this before with the NDX. You've been through this with the Russell. It takes a while for this to settle, right? So don't look at this. Don't look at this. Look at your cost basis. 869 bucks on the Russell today. Profit there. Fully profitable on that trade. Our NDX trade, again, don't look at this number. This is ridiculous. You got to back these all out. So I guess I can't calculate the NDX. I'll have to wait for that. Our SPX trade, where's our SPX trade? That's not showing correctly either. So we had a really, really good day. 5 up, 5 down, all profitable. You can't ask for much more than that, guys. You can't ask for much more than that. So great day of trading, guys. We'll see you back in the room tomorrow. I don't know that it's going to be as active tomorrow as it was yesterday, but we'll have some trades for you to take a look at. So have a great rest of your day. I do appreciate all you guys. Really do appreciate you guys being a part of this program. If you ever feel like maybe you're not getting the value out of the program that you would like or desire, feel free to reach out to me. Let's chat and see if I can help you at all. I do appreciate y'all. Have a good rest of your day, and we'll talk to you guys tomorrow.